Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. All right, good morning, everybody. Welcome back. Hope you're doing well in this crazy time. Yesterday, I put out a video just talking about the tariff announcement, the numbers, the stats, the big board that Trump pulled out. My goodness, crazy day yesterday. And of course, some follow through to the day. Markets follow through today. Markets are down a good bit today. Following through from that kind of event yesterday. Good morning to everybody. Good afternoon. Welcome back to another stream. Bulent, good to see you. Our solo channel member. We appreciate you. Buying us a coffee once a month. We appreciate that. Got liquidated, Nick. Yep, completely liquidated. Back to the demo account for me. I'm just kidding. No. Actually, I had a couple profitable trades this morning closed out on one of my positions. Let me see if I pull this up. Closed out of my Kiwi dollar long position. I'm just pulling up my Discord. Here it is. So closed out of Kiwi dollar for a winner yesterday or today, but entered this a couple days back. Really huge pop for a lot of dollar crosses. I'm still floating some nice P&L on euro dollar as well. So if I take a look at NZD, USD, you can see basically trade popped up into this resistance, just took my profit there. I have a lot of dollar short positions, which obviously did very well in the craziness yesterday. Still waiting on the sidelines for NASDAQ. Don't have any positions here, but looking for an opportunity if we start to reverse. I mean, we're right now, somebody asked me, Nick, what do you do if the market's in the downside? Do you short? And for me personally, the answer is no. I don't like to short indices. It's a really hard trade for my style of trading, and also I just find it to be a very difficult trade in general. Markets tend to, over the long term, go up. So it's really difficult to catch those short side moves. Some traders can do it great. I'm not saying you can't. But for me, I prefer to stay away from that. And then people ask me, well, then what do you do instead? Well, this is the beauty of trading many different things. Lately, I've been trading a lot more currencies. I've been trading gold. I've been trading silver. And I've been doing well on other sides of things, which is really a great thing because, again, when this market is behaving in this way, right, where we're just getting this very strong sell pressure that just keeps coming back into the market, what's awesome is I can keep my focus on other things. So I have euro dollar longs, which I need to look at this. Basically, we just flew through this level of resistance. We are testing this kind of area here. Question now becomes, are we going to get a straight run up to 1.12? So my focus has has shifted recently a little bit more from the indices in terms of like actual trades to some currency pairs. I've been trading euro dollar, Kiwi dollar. I also have a CAD Swiss position. This one's not working out so well. You can see my buy entry here. Market has gone against me a little bit, but I would actually like to get some entries at lower prices. I'm dollar cost averaging on CAD Swiss. So this one pays a nice positive swap to hold it over time. So, I have that trade going on. I have Kiwi dollar, which we closed out for a profit here this morning. And then euro dollar also nicely in the green. This one is ripping here. So euro up on everything that happened yesterday. A lot of dollar bearishness out there, right? Take a look at the dollar index, down almost 2%. This is a crazy move for the dollar. This key area of support now became resistance. Once more, again, shallow pullbacks and follow through have been the name of the game with this dollar move, right? You've been seeing these big moves, these retracements, follow through to the downside, right? So we are still seeing sellers in control. Nick, is there a reason why you don't trail stops on FX? Yeah, I use a different style of trading. I actually dollar cost average when I trade Forex, and when I trade indices or commodities, I trail stops and I'm kind of trade more of a momentum trading style. When it comes to currencies have a tendency over the longer term to kind of mean revert. If we take a look at like euro US dollar, we just scroll out, take a look at the weekly chart, right? This thing doesn't actually trend very far in either direction most of the time. So for me, I actually trade primarily when it comes to currencies, I trade a mean reversion style. So that's something that I personally do. Of course, I'm still implementing fundamental analysis. And, what I think here is that the euro dollar is headed back to test this area of resistance, this 1.12 level. If that happens, I'm probably going to close out another profit here. So I have a slightly different style of trading currencies than I do trading in indices. And I think it's important that you think about this. Different markets have different behaviors. An entry and exit style can be, kind of better suited towards certain markets. Gold, clearly, if you had a strict, kind of take profit, stop loss, and entry on gold, it actually probably underperformed trailing stops in the last few years because trailing stops would have allowed you to capture these huge moves, right? So different styles for different markets are something that I personally utilize. So yeah, gold, I mean, we've got a lot to talk about here. We've got some huge moves happening in this market. If you guys could do me a big favor, hit the thumbs up button on the stream. I've been doing a lot of content here recently with everything. There's no shortage of stuff to pay attention to. S&P 500 taking out the lows. Again, fresh lows on this one. Let's actually just clean up our chart here. What was support now potentially acting as resistance here today. Stock market opens up in an hour. And we've got, let's just see what we had this morning. We had unemployment claims, right? Came in a little bit better than expected, 219K compared to 225. And then we have services PMIs coming out in, what is that? An hour and 20. So got some interesting data coming up here for markets to chew on here following that really big sell-off that we saw yesterday. It was kind of amazing. Yesterday, you had an announcement initially, right? Trump was like, we're going to do a blanket 10% tariff. And people celebrated that. Why? Well, because 10% was less than people feared. People were like, oh, 10%, that's way better than 20%, which was kind of like the whisper on the street, if you will. Oh, he's going to do 20% sweeping tariffs. Well, he kind of did, right? So in fact, what he did is he said, oh, actually 10% is the baseline. But then, he had his big white or his big board, right? Where he went through all the different countries and all the different, the way they calculated, I suppose, with what the quote unquote real cost of sending goods to these countries was. And then he decided to, in his mind, made the graceful decision to give them half the tariffs that they are charging us. Now, again, of course, as with everything else, people are debating whether or not his calculations, his team's calculations, are right or wrong or whatever. But the big point is Chinese tariffs bumped up to 54%. And that is freaking the markets out. Why? Well, because Chinese goods going into the United States make up a massive amount. I mean, let's think about some individual stocks for a second that could be impacted by this. An easy one is Apple, right? Apple does a lot of, stuff in China. Stock's down 7.5%. Let's take a look at Dollar General, right? Dollar General getting hit by this as well, because again, what you can think about here is a lot of these companies import things from China. So a lot of companies import a lot of stuff from China. If you have 54% tariffs, it really seriously disrupts a lot of stuff there. So now the market's kind of wondering, are other countries going to kind of band together on a grand scale to combat this, or are people going to come to the negotiation table? And so we are left in limbo. And what I mean by that is, was there some resolution yesterday? Kind of. But now it's just a question of, well, what are other countries going to do in response? And that leaves us back in that uncertainty camp. So, gold's down 2%, but I think there's still a lot of uncertainty in this market. And so as you see gold, why would gold be down? Actually, I was talking to Frank on our team here this morning. He's in the office early this morning. We were just chatting about it. I actually think gold prices could continue to move higher, but there was a little bit of a knee-jerk sell this morning because, in my view, some of the fear, some of the uncertainty was lifted yesterday, right? So how do we survive these markets, guys? It's a crazy time. I am still sitting in about 50% of my portfolio is in either cash or non-equities. So I still have a lot of funds personally to go shopping in this market. Now, I'm going to straight up, this is how I am approaching this. I'm not telling you what to do, but in my view, if the market continues to sell off and has these, is stricken by fear for the next few weeks, I'm probably going to start adding some more shares to key companies. I might actually have to start looking at Apple for a possible buy. If we continue to see, I mean, Apple's down here at 206. We start dropping into the 190s, into the 180s. If you start to see Apple on sale like that, I'm going to have to go take a look at some of these stocks and start buying some stuff for the long term. Stock market's having a pretty good sell-off here. Take a look at the S&P 500, now down 11% from the highs. I mean, for me personally, I get really interested in long-term stocks if you start getting close to 15, 20% sell-off. I mean, so I actually, in a weird way, want this market to continue to go down for some longer-term stuff. And I have no interest in going long on this market in terms of a short-term trade, right? Some of you guys know, a week ago, I was trading this little rally. I thought we had some room to run here, and I was just straight up wrong. In fact, I stopped out, and I'm very glad that I did, because this market has just completely tanked since that point. And really, if you're asking, I know a lot of people have been watching my videos. I want to be very clear here. Long term, I'm kind of a perma bull when it comes to stocks. You may pick up on that if you watch my videos long enough. But that does not mean that every single time the market's down, I have to go buy it with a tight stop, right? I think that's actually a recipe for disaster in this kind of market. My opinion when it comes to trading is I don't care to be the first one to buy a new trend. Like, maybe I go long today and maybe we see the recovery and I look like a hero. But I've had more trouble trying to do that than simply waiting for something like this. Let's say we get a sharp reversal and I miss a big jump, right? Okay, fine. But what if we start to see this and I get this trade? I just think that I have a much higher probability of buying into retracements in a strong market than trying to buy into a weak market. Does that make sense? So I'm still watching the NASDAQ all the time. It's my favorite thing to trade when it's cooperating. But right now, it's simply not. Price action is super bearish. And I would not be surprised if we continue to sink lower in the short term. Take a look at the Russell, down 1.3%. Crazy stuff. The DAX is down 2.5%. Chinese stocks down 2%. The Nikkei, my gosh, the Nikkei, right? The Nikkei's gotten absolutely smashed. So you're seeing some pretty panicked markets out there. The VIX is up 25%. We're back up to a 27 VIX. It's a crazy day in markets. Currencies are moving like crazy. My dollar shorts are doing, the dollar shorts for me are doing very well right now. That's one thing I've got going for me. I'm long euro. I was long Kiwi dollar, closed for a profit here this morning. So I'm all out of Kiwi dollar longs. Euro dollar still long, looking pretty good here. CAD Swiss, not so hot, right? This trade has been going against me. So I have a loss here and a very nice profit on Euro dollar running, and then closed out for a profit on Kiwi dollar. So currencies wise, I'm busy, right? And that's the thing, is I just pivot and focus a little bit differently when the NASDAQ and S&P 500 are not cooperating. When price action's super bearish, I don't like to short them. So I just go look at currencies. I look at metals. I look at other things, and I trade other markets. So just something to think about. Guys, up next, we got Miko and Marco joining the show. We're going to be taking a look at some technical setups with them. Before we move on, let me just remind you guys that the EdgeFinder sale that is going on right now is, and I will say this probably 1,500 times this month, so please bear with me, but it is our biggest sale that we do all year long. We're doing 40% off the EdgeFinder for the time being. This is our third year, our third anniversary since we launched the EdgeFinder to the public. This tool helps traders to spot economic data trends. It allows them to also track sentiment in markets, whether it be the commitment of traders data to track institutional money, the put to call ratio, retail sentiment, all these different tools available in one singular browser-based platform. You can use it on any device, and it's a one-time payment to get access. If you don't have the EdgeFinder, don't miss this chance. It's the lowest price that we do all year. To get that information, send us a direct message right here. Link is in the chat, or you can head over to a1trading.com to read about the tool, to find out more information about it, and potentially take advantage if you like what you see there on the tools that we build for traders around the world. Okay, up next, guys, we got Miko Marco joining the scene. Stay tuned. We'll be right back. We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show. All right, we're back with Miko Marco. How you guys doing?
Hello.
Hopefully you're holding up okay in this crazy, crazy market. It has been a wild, wild week. Yesterday, Trump announcing his tariffs or his reciprocal tariffs to all of the different countries all over the world. You know, in 2018, there was a lot of drama because it was Trump versus China, right? That was the big thing. It's crazy now because it's Trump versus, it seems like, everybody. You know, tariffs with pretty much every major trade partner of the United States were announced yesterday, and markets are not having it. They are very volatile today. You have the dollar index down 2% on a singular day. That is a massive drop for the dollar. You have indices plummeting here this morning. You have gold down 2%, silver down 5.3%. It's a crazy day. I'm curious what you guys' thoughts are. And maybe with all of this, I'm very curious to maybe just get a chart of the day from each of you guys. What is your focus? You guys are, for audience members, we do this every week. These guys are very technical focused, but Marco also incorporates little fundamentals. But I'm very curious to hear what you guys are focused most on a day like this. So Miko, why don't you go first? What is like your chart of the day? What's got your focus in a time like this?
I would say pound yen. I really like the yen pairs at the moment for some sells. If I can spell it, there we go. For some sells, and it looks like yen is gaining some strength. I'm looking to get into a trade. I'm not in this position yet, but it looks like price could be topping out, and this could be another major high on the daily chart, and perhaps for a big swing to support. So I'm looking for some selling opportunities. It's been a bit of a rough one because we've been very, very choppy, very back and forth, especially with yesterday's move. Things were looking very bullish at one point, now crashing back down. So I'm waiting to see if support can break. And then if that is the case, hopefully some retest could come into play. And I'll be looking to see if I can swing it back to lows. I think we can go a lot further than that as well. I'm very bullish on the yen itself. So I'm pretty much looking at all yen pairs, but pound yen kind of looks the best to me. It's had a nice pullback. So if you can start to crack through support, that will be the green light for me. I'm looking at this being the next high and perhaps a nice swing into support. So yeah, pound yen would be the chart I'm most focused on right now.
Yeah, no, it's a good one, and it kind of it encapsulates, I'm not sure if that's a word, captures the theme, I guess, of the markets right now, right? You have a pound, which is a bit of a more risk on type currency, versus the yen, which is obviously a risk off currency. People flock to the yen in times of uncertainty, and there is certainly no if there's one thing certain right now, it's uncertainty is very high. And so, you know, pound yen, interesting chart here, as you mentioned, kind of on the daily chart, putting in maybe another lower high here, and very curious to see how that plays out. Again, if you do see follow through on the indices to the downside, there's a very strong probability that pound yen would move to the downside with that. So very nice. Marco, what about you? Chart of the day, most convicted idea at this time.
Yeah, so for me, it'll be the euro dollar and the pound dollar. But just before that, I want to briefly mention, I know a lot of people are panicking because of all the tariffs. and everyone is, at least online and in person, extremely negative about it. But what you have to look at is that the truth is somewhere in the middle, as always, because my brother and I did the calculations, and if you want to buy a BMW, the same car, the same spec will cost you around the same money in euros in Croatia, which is in European Union, and in the States. But if you want to buy a Ford Mustang with a V8 engine, it's going to be around 24% more expensive in Europe compared to the States. And that is before all the crazy taxes that we pay. So there is some, let's say, weight to what Trump is doing, but of course the truth is somewhere in the middle. And I do think all of the numbers from the big board are a bit exaggerated, if you ask me. So very, very interesting about that. Now, in terms of the charts, I would say, euro dollar, pound dollar, those are the ones showing me a lot of momentum, giving a bullish reading on the EdgeFinder as well. Gold is bullish on the EdgeFinder also, but technically it looks a bit broken on this 1 hour chart. So what I would look for is some nice continuations on these charts, like a flag formation or maybe some sort of a push up and then a pullback, break and retest. Yes, they do seem kind of extended, you could say that. But again, for my, let's say, OG strategy, I'm looking for these large momentum moves, unexpected moves, unexpected market conditions, and that is what I really like to see, and that is what I count on continuing for the future. So yeah, that's the play for me.
You know, Marco, that's a great point in terms of, like you said, a broken chart. It brings me back to something I was discussing a few minutes ago, just before you guys joined. Somebody asked me recently, they said, Nick, what do you do in a market environment shift? And I think that's maybe important for all of us to think about, for everybody listening to this podcast or this stream, and everybody who's, active trader. You have to think about, like, okay, what do you do when the VIX does this, right? At the end of the day, the VIX is something that unifies all of us, whether you trade Forex, indices, it doesn't matter. This is just a reflection of market sentiment to an ultimate degree. When the VIX is flying high, people are really uncertain, and currencies move a lot. Currencies moving like crazy right now, more than they have in some time. Gold is moving a ton. Indices are moving a ton. Everything is moving, and you have to have a plan in place before that occurs. Otherwise, you can get wiped out. How many traders have thought they were a hero when the VIX was low and markets, are mostly relaxed, and then they get absolutely blown out of the water when the market environment shifts? And don't even get me started on these August, 5th major, movements higher in the VIX. The point is, we kind of have to be thinking about that. And for me personally, I'll just give you an answer. Somebody asked me this recently in my comment section. I thought it was a good question. They said, Nick, you mostly trade indices on the long side. What do you do in this environment? And the answer for me is, because I trade a wide range of things, and I know all three of us do, I actually just shift my focus. Like, although I'm still going to watch the indices all the time, I'm not trading these, because, again, I like certain environments for indices, low volatility, uptrends. I love that, right? I love kind of trading that with a trailing stop. But when it's moving to the downside, I don't really like to short. We've talked about this a lot on the streams. Sell-offs are very sharp, but then so are the bounce backs. Sharp bounce, it's a very difficult for my style of trading to trail a stop, because usually sell-offs are very sharp and short-lived. And I mean, they can go way deeper than you think, but they're usually not very, very long, unless you enter into a true bear market, which, some people would argue maybe we're headed towards. But I'm curious with you guys, kind of same principle applies. You get a huge spike in volatility. Marco, how do you adjust for that? Do you change anything with what you're doing? Or do you simply just shift your focus on what you're trading or looking at? Or do you really change nothing?
Yeah, so for me, of course, I have recently started to trade indices with fundamentals, of course. So when the volatility is extremely high, it's connected to dropping price in indices and stocks, which is something I don't really want to get involved in. So the goal is to long-term go long on the indices. But for my, let's say, OG strategy on Forex, volatility is pretty good. So what is happening now, since the tariffs have been announced, is what I like to see in Forex pairs. So a lot of momentum, a lot of follow through, a lot of movement in one direction. So I would say I have the same opinion. So volatility up, stocks are a no-go, but Forex is a pretty good market to go into. Yeah, in terms of gold, again, in this specific scenario, fundamentally bullish, but yeah, just a lot of selling pressure right here. So I would need to see some cleaner price action, more steady uptrends such as we got in the last few weeks. So I think Forex is a very good play when the volatility goes up.
It actually, in 2022, I had a really tough trading year. I've talked about that a lot of times on the indices and gold side of things. But currencies, that was one of my best years ever. That high volatility, especially, what's really nice about volatility, it's a double-edged sword. But let's say you're trading the euro, and I've got a good trade on the euro right now, a trade that's taken off here in my direction. What I love about that high conviction or that high volatility is that when you're on the right side of it, you can very quickly capture some really nice movement. So same question to you, Miko. You get a high volatility environment. Obviously you're focused mostly on Forex. You also trade little metals. How do you play that environment, and do you typically like or dislike this type of movement that we're seeing?
Yeah, I would say I like it, similar to Marco, when especially in FX, is when we don't really have a lot of movement, that's a lot of times where you can easily get chopped up and lose a lot of money. If there is clear direction and momentum in that direction, it's either one or two things. You're either looking to go against that and call the tops or the bottoms, or you're looking to follow that and wait for pullbacks. And for me, it's mostly looking for pullbacks. So when I can get some clarity in direction and it's not looking too choppy, then that's actually when my eyes light up a little bit and I've got some clarity with what I'm looking to do. So generally speaking, if there's a lot of momentum, especially in one direction, that's a good thing for me.
Yeah, fair enough. It's it's a double-edged sword, as always, with volatility, right? You get the big moves up, big moves down, and clearly with this amounts of volatility, you're seeing just everything on the move. Take a look at the Nasdaq, down 1.4% here today. S&P's down 1.5. Mark, you're talking a little bit about how applying a simple filter of kind of downtrends and uptrends could kind of help with watching the indices. I'm curious your thoughts. A lot of people are watching these. They're looking at gold. What are your thoughts on indices right now?
Mm-hmm. So for indices, best to look at them on the daily. Well, we are continuing with the downtrend, and it makes sense with volatility going up. So in the best trading books I read, it says, look, when the volatility is going up, don't go long stocks. I mean, if volatility is going up and stocks are going up, something is completely broken. So I think Wix is a great chart to see if the stock market is kind of recovering, or should you be really careful. As you said, Wix is going up, which means probably this thing could go much, much lower. We broke this key level as well on the S&P. I think on NASDAQ, we broke it a while ago. Yeah, we did. So the daily chart is closing bearish as we speak. I'm bearish on the indices for right now. Is this doomsday? Well, if we look at let's say the monthly chart, I would say this correction is still, it's pretty much nothing. So this can go a lot lower, and then I would be very concerned. But if you look at the grand scheme of things, this is, again, a small correction. So corrections are what happens in the markets. You cannot get a straight line to the upside like this. So you have to have these corrections sometimes. Look at this one in 2022. It is healthy for the markets, and if you're smart, it gives you a great buying opportunity to get some stocks for a cheaper price. So corrections are not all that bad if you're smart.
Yeah, it's a great point. And unfortunately, so for a lot of people in these types of moves, if you go into these moves with a lot of leverage, like I know, we're talking about, there's all sorts of people that watch these streams. There's people who are traders, swing traders, day traders, scalpers, investors, position traders. It's a little bit of everybody. If you go into a position or into a time like this with a lot of leverage and a lot of, all out bullishness, that is a really dangerous thing that a lot of people play with the indices and with gold and everything that, tends to float up, is people kind of take a good thing and they turn it into a bad thing. They take like, okay, stocks typically, grow, economies grow around the world over the long term, things typically, progress. But then what they do is they make that into a bad thing. They go super leveraged. They go, taking massive risks in this market because they believe that can't change. And as you pointed out, we're seeing now finally a proper pullback in the stock market. We haven't had a movement like this in quite some time. You had the August move, but it very quickly faded back towards those highs. So yeah, I mean, it's something to think about. Miko, what about yourself? When we look at indices, bullish, bearish, neutral, what do you think?
Yeah, so it's not looking too great for the indices at the moment. The key takeaway for me is that the market's now putting in lower lows and lower highs on the daily chart, so we're now actually trending bearish, breaking through structure. So I do think there's more downside to be had. Again, as to where, I'm kind of looking at the higher time frames, weekly, even monthly chart, to kind of gauge areas which we could pull back into. I think for the S&P, there was a brief pause in here around July last year. I feel like that could be an area which we might start to find support, but it is a situation we kind of have to gauge the market as it's going along. But yeah, the key takeaway is lower highs are being printed. We respect the 200 very well on the daily chart as well. And especially yesterday's candle, big wick to the upside, convincing close to the downside, and now looks like we're breaking support. So with this one, if you're kind of intraday, I'll be focused on some smaller pullbacks with this one if you're interested in shorting the market. And yeah, if you're looking to go long, I think need to stay on the hand, sit on your hands for a little bit longer.
Yeah, and I guess while you've got the screen, Miko, what are your thoughts on the metals here too? So obviously indices, really rough start here to the last, really the last, total year. We've given back a lot of gains here, but same with the indices. You look at, the metals, right? You've got gold and silver getting pretty hit hard today.
Yeah.
Gold down 2%, silver down almost 6%. I mean, that's a crazy downside move for silver. What are your thoughts on these ones? Metals, are these pullback opportunities, or do they look broken as well?
It's interesting because I've been focused on silver quite a lot. I was actually in a trade with this one, but I did get trailed out at break even on Monday, I think. But yeah, I was looking at silver this morning because it was looking very bearish. I was like, okay, is this another opportunity to buy silver again? Probably. I'm looking at this level here, which is around 32.3 roughly. And this was going to be the level which I looked to buy from, and still is. The daily candle still got about 8 hours left before it does close, but I do not want to see the daily candle close below this. That's a bit more of a bearish signal to me. My thinking was the market's still pretty consistent with these higher lows. If price can give me some indication of a higher low forming there, wicks, rejection, I'll be happy to try and have a stab at things. If we do break through that on the daily chart, then I would back away. Still very much long-term bullish, but maybe price is just really struggling to break resistance here, and we're going to have a deeper pullback. In terms of gold, gold's coming down pretty hard as well. I think that's just kind of healthy for gold, to be honest. It's been so bullish. So maybe now it's time to have a bit of a breather. This is our first area of interest for gold. I'll look to see what we can do here. Around 30.50, that looks like a nice place for a buy for me. And also the prior high here too, if gold really wants to sell, around 3K, looks pretty nice. So I'm still very much a bull on both of these markets, but being careful. Momentum could just keep bleeding, so you need to kind of judge that as well. But yeah, silver's kind of where my focus is, and that level of support does need to hold. If we end up cracking that on the daily, I think I'll just sit on the sidelines and just see how price develops from then on afterwards.
I think for the traders out there that are watching gold right now, especially, I think that this is just an eye-opening day in the sense that, look, a lot of people were very, very frustrated by the market going up every day for gold, and now that it's coming down, this is either one of two things. If you're somebody who is bullish, your patience is being, you're very thankful to not have chased. And if you were impatient, you're probably learning a hard lesson right now. Gold can sharply drop. It can give back just like indices, right? Gold, silver, these things can drop very, very aggressively. And so patience pays off big time in these types of upward trends. It's really hard to watch something go up every day and to not be a part of it. I'm very aware. I've been caught on FOMO more times than I wish, than I ever could have imagined, right? It's part of the trading journey. But right now, a lot of people are probably learning the lessons of chasing, or if you have been on the sidelines for gold, you're like, wow, look how much we gave back so quickly. And as you mentioned, momentum here in the short run seems to be favoring the bears. This is a move of from peak to trough of 3.3%. If we were to have one more day move the same way, we're back below 3,000. So just as an example, right, if you were to follow through and do the same distance from high to low here again, just goes to show how quickly a market can turn and how violent it can be when it does. So I just think that, again, people who learn hard lessons, you can either get frustrated and call trading a scam, or you can just learn, like, look, you can't chase. You have to be patient. Markets eventually kind of recalibrate. And we all kind of knew gold was overbought. Now, again, I will not claim to have said, oh, I think gold is going to sell off today. I didn't call that, but we all kind of knew, like, look, metals are stretched. They have some room to pull back and still be bullish. So I don't know. Same question to you, Marco. Is this chart broken, or is gold, possibly pulling back to some key levels?
Yeah. So let's go to the daily chart. I think this actually looks pretty good on the daily. So we're approaching this sort of support level, and if we can maybe retrace a bit, print a bullish candle on the daily chart, that could be an opportunity for me personally to look for some buy setups. So what I would need to see is definitely some bullish momentum to kick in. Again, we can maybe consolidate around here and then start to trend up, at which point I will be looking for buy setups if it's in line with the EdgeFinder. So I'm not deleting gold from the watch list, but I need to see this momentum stop. So I need to see the selling pressure stop, give me some buying pressure, and then I would be pretty happy to look for buy setups, because we have then approached this support level on the daily chart, and we have corrected a bit, which is nice. So we are not overextended. That is kind of the story that I like. And also I wanted to mention, so with my colleagues today, I went through my FX book. They have a bias. They show you, is the retail long or short? And it was very cool to see that retail was like 80% short on the euro dollar in the last couple of weeks. Like, they were extremely short. So retail really likes to fade moves. And of course, they have probably lost a lot of money in this huge pop to the upside. But that's a great indicator that I saw on my FX book, because they have all of these retail brokers connected to their platform, and they can see how many positions are going long and how many are going short. And we back tested the chart a bit, and we saw that there was a extremely good correlation between the retail being really short and the market exploding up. So that's something that was really cool to see. And it's in the EdgeFinder as well. Again, a great confluence for your trading.
Yeah, I was looking at that just as you mentioned it. You've got euro dollar, pound dollar here. These are some of the extreme readings here in terms of sentiment. I mean, it's amazing to me too. This is, we all got on here, all three of us. We look at indices and we're like, oh, that is ugly price action. So I don't want to say that, we're wrong for thinking that way, because I think a lot of people are bearish in the indices, and I actually think that short term price action still does look bearish. But there is the ultimate test. You've mentioned the test that you guys just did, Marco. One thing that I found through tests and through other people who have done similar tests, and I encourage listeners to go do this research for yourself. This indicator right here, the AAII Investor Sentiment Survey, has in the past only a few times gotten this bearish. Look at this, 62%. It just got more bearish. So the reason I'm bringing this up is that historically, when you get these types of readings, 12 months later, 6 months later, and like 3 months later, almost every single time the market is higher. And the reason I say that is like what people tend to do is they tend to like sell aggressively all at once and flush out all the selling. And then it kind of like bottoms out and rips higher. And it's like an interesting phenomenon because again, it's so hard to think about buying the indices at this time. Probably everybody in this, you know, from a short-term perspective, right? From a long-term perspective, I think most people are like, oh yeah, you could probably pick up some good stocks at the low and 5 years, they'll probably be up. But you know, from a short-term trading perspective, this makes me very, very interested in looking for signs of price action bottoming out. I can't say that I'm looking to actively buy the indices, but when you get this extreme sentiment, it does, you know, make me curious. Miko, what do you think about sentiment indicators? Do you use any of them in your own trading? Do you consider them, you know, when you have crowd sentiment going one way? What do you think?
I don't really look at them too much, but I can kind of gauge when the market is, when retail are very long or short. Typically, any market that is gone up for a while, people are looking to sell. Any market that's gone down for a while, looking to buy. And especially in pullbacks as well, because I kind of want the pullback to be a little bit deeper than maybe you would have expected to be, because that's kind of where people are getting long, and then maybe their eggs, they're getting stopped out a little bit, and then the market potentially moves. So I don't really look at it a lot, but I can kind of gauge when the market is, when people are looking to sell a lot or buy a lot. And I tend to try and get in later than them. But it's not something I actively have to have in my favor.
Sure. Yeah, no, that's a fair conclusion. And yeah, after, you know, looking at charts and then sentiment so frequently, you can almost spot it. It's almost like if you see a chart that's, you know, I could tell you with, I would say, and most of you guys could probably do the same, probably 90% accuracy, like if retail is net long or net short on a certain currency pair, just based on what the price action's doing. That's fair. I also think it's just nice sometimes you get some interesting surprises. Like you'll see a chart that's like moving up a bunch and retail's very long on it, and you're like, okay, let's you know, be careful there. So can be useful to check in on it as well. But yeah, I mean, what a crazy day. Just a recap here. Look at that. Silver down 6%, copper down 3%. Copper being down 3% also kind of gives you an indication. Oh, and by the way, oil, we haven't even talked about oil. Oil's down 6% today. So what is that telling you? That's telling you fundamentally that there's concerns about global recession, right? When you get an oil drop like that, that's telling you, oh man, we got serious trouble. Because here's the thing with the tariffs. Excuse me. If you get a massive dry up in trade with the United States globally, what you have to remember is that many countries, a lot of their exports go to the United States. The United States is a massive consumer in the global trade, you know, dynamic. So putting, you know, a toll booth in front of all of that trade activity is concerning to the market. So we see oil down quite a bit, and price action is just fascinating today. You're getting so many, you know, strong-bodied candles across the board, whether it be the dollar index down, euro and pound up. And I could be wrong, but a lot of times when you see these types of price action moves, like if we see oil close like this, if we see the dollar close the way it is currently, if you see indices closing towards the lows of their thing, my opinion, price action wise, would be that's likely to continue in the short run. So we'll see. But I don't know. What, Marco, what do you think about that? Like, is there, based on price action, right? Have you found that if you get like these very strong one directional candles, have you found them to continue often? Does it matter what the trend context is? What are your thoughts on that?
Yeah, that's exactly with my first strategy. The way I like to see price action. So I like to see those fat candles with a nice clean close. An example would be right here, this candle, this candle, this candle. If you do some back testing, just pure technical analysis, you will see most of the time these candles do continue. So if a huge wick prints on the end, then not so much. Yep. But if you see a huge body and a nice clean close, as I call it, then it does unfortunately continue. You can see it here, for example, this candle, just a small wick, this one also just a smaller wick. So it is something I have definitely spotted in price action, and a lot of my strategy, my first strategy, is based on this sort of methodology of looking for large bodies and clean closes. And about oil, hopefully gas prices go down a bit. So
Yeah,
we
that's
will
one
see.
positive. Well,
Yeah.
and not to keep you guys too long, because I know we've run over already. I just want to make this quick concept. Oil's down, yields are down, right? So on my screen here, we got the 10-year yield down significantly. And here's the thing: is the Trump administration seems to be less focused on the stock market. I mean, clearly the market's down so much, but well, not so much, but it's down. But then the other mandate that they seem very keen on is keeping yields down, like interest rates lower, and oil prices down. And in some ways they're succeeding, but then critics would say, well, yeah, but at what cost? You're sending us into a potential recession, right? Recession fears are rising because of all this. So it's a crazy time. And I'm imagining that we have many Thursday sessions coming of interesting conversations. So I want to thank you guys for taking some time out of your day to share some knowledge, some wisdom, some experience, and some good old-fashioned charts with the audience here. Just for everybody who's listening, do me a big favor. Make sure to go subscribe to Miko and Marco on their own respective YouTube channels. They put out great content for the trading community completely for free. You can find them on their own respective YouTube channels. Here's Marco's. You can go to Marco's Trading Journey. Just type that in on YouTube or click the link in the chat. Same thing with Miko. Miko Audu on YouTube. You can type it in or click the link in the chat. Guys, thank you very much for coming on the show today and sharing some thoughts.
Thank you.
Thank you. See you next week.
See you guys.
See ya.
Good stuff as always. And again, markets continue to get pummeled here, man. You got the yields down. Bonds are ripping here. Look at this, up 1.4% for TLT. You got NASDAQ continuing to fall off a cliff here. And this is the time, man. This is the testing time for a lot of traders and investors. What I mean by that, there's going to be a lot of people who throw in the towel on this. There's going to be a lot of people who have not seen a market like this. One of the benefits, I would say, to simply trading for a long duration of time is that you are more likely over time to experience new markets. There's a lot of you guys who are probably earning your stripes right now. Like, you're probably either getting beat up in this market, or you have seen this once before and you're playing it a little bit better this time around. But a spike in volatility is, for many traders, a test, right? It is a huge test, because what happens is that, look, if you were long the NASDAQ during this time, that's hard to mess up. It's really hard to mess that up, right? Buying stocks, buying the NASDAQ, buying Bitcoin when it's going up is very easy. Anybody can do that, right? When you start seeing the average everyday person jumping into stocks, jumping into Bitcoin, that's because it's been very easy to make money in those things. But what we see time and time again in markets is that markets are not a free way to make money. They are not easy. They are hard. It is ridiculously hard to make money in the markets in the long term. So these are moments where traders get absolutely tested. And what you will see, I have seen it for years. It is a very weird thing. If you come to my YouTube channel, many of you guys come around, you stick around, and I appreciate you, long-term people. But this YouTube channel is kind of like a beach town. I've said this before in my videos, but my YouTube channel is kind of like a beach town. Everybody comes for the summer. Everybody comes for the holiday. And then a lot of people go home and the town is quiet. That's the trading community in general. Most of you, and this is a weird phenomenon, I'm not trying to disrespect anybody, but most of you guys won't be trading in a year, 2 years. Some of you are crazy enough to stick through this with me and do this. I don't know what's wrong with us. Something's not right up here, because trading and investing in markets are chaotic, difficult, psychological warfare. It's nothing about this is easy. Trading is a ridiculously difficult venture. And on my channel, I never sugarcoat things. I have too much love and respect for trading as a craft and investing, trading. But it is not an easy way to make money. 95% of people, as Bashi says, fail. But I would actually say it's more like 99.5. I mean, it is I can count on my hands the number of people that I know who are very active traders that make very consistent money over the long term. And, people always have something to say in the comment section about, you can make 20% per month and you're ridiculous if you're going for less. And look, for the ones who listen, this is what my channel is for. Slow and steady wins the race. If I can give you one thing in markets, again, I've thought about this many times. I do this every single day. I've thought about this many times. What's the one thing that I could bestow upon the trading community and stand by and feel like I made a good difference in the trading world? Because if I make $1 million in trading, it doesn't do you any good. But if I can leave you with a message that has helped me to get there, then I will feel like I've done something really positive. And that message is that 2 to 5% educated guesswork, calculated risk management, go for low gains, stop chasing high returns if you're trading with small amounts of money. If I can leave you with that kind of message, some people are going to hate me for that message. And people do. People really dislike when I talk about that. They're like, Nick, what are you talking about? Like, you can make 10, 15% per month. It's easy. Like, we make a bunch of money in the markets. Like, why are you telling people they can't turn a small account into a big account? I'm not telling anybody they can't do anything. I'm just telling you that from my experience of becoming a profitable trader and seeing some horrible stories for people lose a lot of money in the markets and experiencing pain and loss in the markets myself at times, what I can tell you is that most people do not listen to that theory. They don't listen to slow and steady. They want to make money quick. They only got $1,000. They want to turn it to 5. They want to turn it to 10. And what they do is they turn it to 0. So most people are not going to listen to that. That's why most people lose money. They go for big gains. I'm very convinced. So my perspective is that if you're watching the stream and you're like, oh my gosh, this market is crazy, most people are going to check out. Most people are going to give up. They're going to throw in the towel. This is too hard. This is a scam. Trading is way too difficult. It's Trump's fault, right? That's what people are going to start doing. And I've seen it countless times. Like that's like I said, this is a beach town. A lot of people come in for the vacation, then they leave. When Bitcoin's straight up to the right, everybody comes in. Oh, this trading thing is easy money. And then Bitcoin goes down. And the same thing with the NASDAQ and gold and S&P, and people chase. And then when they get crushed, they say it's a scam. And the saying, as Alan brings up, is 90% of traders lose 90% of their capital in 90 days. And then what I would add to that is that in the following 90 days, the rest of them lose most of their money, except for a very tiny handful of traders who are like, okay, I'm going to figure out this trading thing. What I found is that simple technical analysis in combination with an understanding of fundamental analysis, paying attention to crowd sentiment and institutional sentiment, taking educated guesses that are back-tested ideas, and risking a small amount per trade. That's it. That's the whole recipe for what I've done in my trading career. It's just really important that I do my best to spread that message. This stuff is ridiculously hard. There is ways to make money in it in the long term, but it's a grind. It's an absolute grind. I've given back in recent times most of my gains for the year. I think I'm like just slightly red now for the year, which, slightly red for the year is a whole lot better than being down 16% or whatever in the NASDAQ. Like, I'm certainly not, happy to have given back gains, but I'm very content with my performance this year so far. Like, in all said and done, I feel like I played this year pretty decently well. Given that, passive investing would yield minus 16% this year, I'll take a minus 1% or whatever my performance is. So this is a test. Market volatility is crazy. How am I surviving? Well, I'm like a prehistoric spear caveman hunter. I chase the buffalo where the buffalo's at. And for me right now, indices are not the buffalo, right? This is not for me where I can make good educated guesses and manage risk. Like this thing is dropping. So what have I done? I've shifted my focus. Granted, I shifted my focus to silver, so that didn't really save me too much. But I stopped out. I'm out of silver. So out of silver, watching gold, I think we could get some nice pullbacks here. Gold's been performing phenomenally this year. I'm watching currency pairs. So euro dollar's ripping here. I've still got a long position, and I'm looking to potentially take profits. If we start getting up into 1.12, I'm going to probably take profits on this move. I've got a really nice trade. This is, let's not, like, I have a bunch of stocks that went red today. But let's not undercut this euro trade. This is 300 pips in profit right now. 300 pips. It's hard to look at this and be like, look, I made 300 pips because I've just got so many other things that are not going well today. Like silver trailed me out, and a bunch of the stocks that I bought are in the red. Look, it's a test for me too. Nothing about this stuff is easy. And so what we do as humans is we're like, focus on the negative, right? We do that. It's like a self-defense thing. But I've got a great trade on the euro. I'm shifting my focus. This is what, this is how in my trading history, how I've been able to best weather the storm is when markets are in free fall. I focus on other things. And then I wait for markets to kind of bottom out and start finding a bullish catalyst again. So yeah, took profits this morning on one trade that I'm in, Kiwi dollar. Obviously took profits a little bit too soon, but that's okay. I'm just going to basically continue to I guess I got to take this off. So I went long the Kiwi dollar, ripped yesterday and followed through today. Took profits on this one. And we'll see if we get some rebound moves. By the way, again, my focus has really shifted heavily towards Forex and commodities at this time. I'm watching silver, gold, euro, Kiwi. That's really the focus for me right now. Indices are always my favorite thing to trade when you're in a lower VIX territory where I can trail stops and trade. But high VIX indices trading is quite difficult. From a longer term perspective, I love buying stocks. When the VIX is high, I add to my stock portfolio. This is the playbook for me typically. VIX goes very high. I focus more on currencies and commodities. And I look to buy long-term stocks that I like. And a low VIX, I focus very heavily on indices. That's pretty much the playbook. So we'll see. But right now, the dynamic has been a little bit more focused towards currency. So I went long Kiwi dollar, euro dollar. The dollar shorts worked phenomenally. So I'm still stuck in a CAD Swiss trade. That's worked against me, right? So this trade's down. CAD got hit pretty hard with everything that happened yesterday in relation to the Swiss franc. Safe havens did quite well. So I'm still holding on to the euro trade. Took profits on the Kiwi trade, 121 pips on that one. So I'm going to probably continue to watch a lot of the dollar crosses. And we've added this new feature here to the EdgeFinder, the eco page. Oh, by the way, I didn't even announce this. We've had so many things to get done today on the stream. I didn't announce this, but Top Setup Sentiment just went live yesterday as well. We're going to get to that in just a second. Let me talk about the Top Setups eco page because not everybody has heard about this one. The Top Setups economic focus page essentially is a page where we stripped out all of the other scoring mechanisms except for economic data points. We received quite a bit of positive feedback for this, which is exciting, but it was because it was the audience that actually requested this feature. The Top Setups economic page takes out all of like the COT scoring, retail sentiment scoring, trend scoring, and really isolates growth, inflation, and labor statistics scoring. And so this is why I went long the Kiwi dollar, +6 fundamentals quite favor the Kiwi over the US dollar at this time. CAD Swiss as well, but technicals have looked a little bit ugly. So I'm still in this trade, but for currency trading, I'll definitely be using this page quite a bit because I really like when I'm looking at currencies. I'm not looking to necessarily trade momentum. I'm looking more focused on just straight up interest rate differentials. I'm looking at these statistics, growth, inflation, labor statistics, to give me an idea of what I'm looking at, right? The two economies in question. So, like I said, I like this quite a bit for that purpose. And then we just recently added the sentiment top setups algorithm. So what this does is it takes from the top setups. In fact, this is going to bother me if I don't do it. So let me just do it right now. Top setups dash sentiment. So the top setups sentiment page, what is very cool here is that the sentiment page allows us to essentially look at COT data, retail sentiment, put to call ratio, and the AAII investor sentiment survey, and score assets strictly based on market sentiment from institutions and retail. Pretty cool. So what that tells you, now you'll notice that the score is much more narrow here because we only have a couple sentiment scoring indicators. If we take a look as an example let's look at gold, right? Gold is getting sentiment score overall of +2. It's mixed on COT data. Put to call ratio, however, shows huge bearishness in gold as of yesterday. So that actually gives us a contrarian bullish signal on gold. So just something to think about. On the flip side, we could go to the most bearish things. You can see -3 scores for Kiwi yen, Aussie CAD, Kiwi dollar. So just adding some new variations to the top setups algorithm. Of course, I still like looking at the sweeping overall top setups algo for getting an idea about charts that I want to look at. But specifically for traders who don't necessarily trade the same way or don't really care to have like a trend score, seasonality score, like if you want to basically take this out, that is what the top setups eco page does, is it really just focuses these key points. Okay. So for those of you who do have the EdgeFinder, check this out. This is a completely free update. We just added these new variations to the top setups scoring algorithm. If you do not have the EdgeFinder, there's no better time than right now to pick up a copy. It is currently 45% off for anybody who is watching the stream right now. It's our biggest discount that we do all year long. We do not go lower on the price. 45% off is the biggest sale event that we do. So if you've thought about getting a copy of the EdgeFinder in the past, do not wait. This is your chance. We're celebrating 3 years since we launched the product. This is our anniversary sale. And if you want access to the tool before that sale ends, take advantage by clicking the link in the chat right now to speak directly with our support team. A team member from us will give you some information about the sale event, answer any questions you might have about the tool. And you can also ask them if you need some resources, like if you want to see the EdgeFinder course, if you want to, that's completely free to check out. You can review the features of the EdgeFinder. If you want to ask about certain things, feel free to do so. We have a support team on the line at all times to answer questions for people about our software. So there you go. We've got ISM services PMIs in 24 minutes. I'm going to stick around to that. It's going to be a long stream for me today. Unfortunately, no James today. We were going to see him, and he said he's too cool for us. He said he's not interested in hanging out on the A1 trading stream today. Just kidding. He's I guess he just got busy. But at least the long streams on a day where we just have some pretty good volatility. How often does the EdgeFinder refresh with market data? So most things update on an hourly or 15-minute timer. Like I said, I'm not going to get into all the specifics about the EdgeFinder, but if you have questions, please chat with our support team. They're happy to do that, and that's what they're there for. So, Nas down 0.65 here, S&P's down 1. There is a slight possibility that today what you actually see, and I've been saying this is still my opinion. I've been saying on my streams and videos, with the NASDAQ, with the S&P 500, there's the possibility that because we now have a lot of the uncertainty known, I think that's why gold is down here today. Some of that uncertainty dried up, right? At least we now know what the tariff plan is. We now have some things to chew on, if you will. Market just hates not knowing things. The next unknown potentially is we don't know how other countries are going to react, how they're going to respond. What's China going to do? What's the EU going to do? We'll have to see. That's the next unknown. But arguably, that is a big unknown that was revealed yesterday. And so there's the potential that you get a little bit of a bounce or a relief rally in response to some of that uncertainty becoming more clear. That being said, for indices, you just have a lot of our work cut out for us, right? If you're somebody who's bullish on indices from a short-term perspective, it's kind of a tough one for me because I'm like, okay, if you get a bottom, how do you know it's really a bottom until you start to get some higher lows, some confirmation? I mean, even here you can see we tried to put in some higher lows, but then the second we came into key resistance, down she went, right? So we have to be careful about this. With the indices, I'm always looking for opportunities to find bullish setups if I can find them. But really, I think I need to see at least this scenario and preferably this scenario, right? Breaks through these resistance points would give me a little bit more clarity. Can we also take a look really quick at moving averages? This is something to pay attention to, okay? Moving averages, which were an ally to the bulls, are now an enemy, right? You have the 200-day moving average coming back in on the NASDAQ. Didn't quite get there, but very close. Hit it on the S&P and sold off. So what was an ally is now concerning, right? Short-term momentum here is still to the downside. If you do get things here, you want to see these levels work off some of the bearishness, right? You want to see these moving averages converge. You want to see price action break through. You don't want to see moving averages just completely, aligning to the bear side, because again, that can get ugly pretty fast. Let's go back in time and talk about the sell-off that occurred in 2022. How did that look? Well, very similar dynamic. It actually is kind of scary. Similarly, you had like this reaction, popped off the 200-day moving average for the NAS 100, and then it tanked, went down, retested it just like it did recently, and then started to move back down to the lows, flushed lower. This is actually crazy how similar this looks to current price. Retest. Yesterday, we took out the lows. So could we see if we're literally just repeating, if we're repeating 2022 sell-off, right? Flush through the lows, a capitulation sell, then we bounced, right? But the problem is these bounces were never able to really confidently start taking out resistance. Look at how beautiful this technical formation is. The 200-day moving average was like your ultimate guide here back in 2022. I know we're speaking with hindsight, but it is worth noting. 200-day moving average comes back into play, sold off, comes back into play, sold off. That really sent us back down to fresh lows. Then the market, bottomed out, made a sharp move higher. And this is why I find shorting to be very difficult. You get these sharp rallies and ultimately just, again, sold off at the 200-day moving average. And every time, look at this, every time we rejected that 200-day moving average, not only did we head back down to the lows, but we printed fresh lows. So we are, like I said, in the process, in my opinion, right around here, where if we're repeating the kind of bear market start that we had in 2022, big sell-off, bounce, double top kind of thing, took out the lows, fresh lows, right? Chopped around, rallied out of that low, but failed. Came back and repeated the sequence. Ready? Look at what happens. We come down again, take out those lows, retest them again, sold off again. This was even more violent, right? Didn't even get the retracement. Then we had another sharp bounce. This is why, again, why I don't like shorting indices, is the rallies are so violent all of a sudden. But multiple times we repeated that sequence before we ultimately bottomed out in October of 2022. So painful because, again, these moves were ugly. That's a 21% drop. If you chased into this one, you experienced then a 27% drop after that. If you chased into this one, you experienced another 23% drop. That's account reckoning stuff. So, we'll see. But we are in the process here of seeing sellers take full control of this market, at least at this time. So we'll see if this does, persist. But with yesterday's tariff announcements, obviously the market really does not like that uncertainty, and it's really now going to be how do the other countries respond to all of this stuff. So we'll see. But again, I think another thing to note is that when we look at market sentiment, when we look at the institutional positioning this past week, I mean, look at the selling that went on. Dow Jones, S&P, NASDAQ, heavy selling ahead of this week. Really interesting. Is the euro supposed to be weak after Trump's tariffs? Why is it going up? I'm still confused. The concern is actually the dollar, right? The dollar concern is like, okay, if the U.S. has tariffs on everybody, that could seriously, obviously could also impact negatively other places, but it could seriously, because you have tariffs with everybody for the U.S., it could really impact things growth-wise in the short term. Think about it from the perspective of if you're someone who, or if you're in the United States, what you have to think about is like all these other countries that you may import from. Those are your input costs. They could be going up in price at the same time. Countries may do more things against the United States in retaliation. A lot of companies, like here's a quick example, would be like Ford, right? Ford imports a lot of its materials for making cars in the United States. It imports them from other places. And so when we take a look at like those kinds of companies, take a look at like Ford, right? Ford here actually flat on the day, but that is because, again, one of the big things that happened, so you've seen this thing actually get cratered. Why didn't it go down more? Well, one of the big things that we got for Ford yesterday was actually Canadian tariffs did not get much worse, right? Mexican tariffs, Canadian tariffs, they didn't get much worse. So in some ways, that was a positive for those countries. In fact, let's go look at the dollar CAD. So there you go, right? The CAD is strengthening here pretty strongly against the dollar. So just something to think about is like, yesterday, if you noticed on that board, there wasn't, Canada, Mexico. Somebody also asked about Russia. So, Russia obviously wasn't on that board. Question from Bulent, channel membership. Appreciate you, Bulent, again, for being a channel member. I'll also make sure to answer your question. Nick, did we miss the entry on gold? What do you think? I always try acting moderate to this kind of moments like, oh my gosh, I'm going to miss. What is your POV about this feeling? Yeah, it's a great question. Just in general about like the psychology here with gold is going to be challenging on both sides. If you've waited for an opportunity, you got rewarded because you had such a sharp sell-off, but now you're like wondering to yourself, oh my gosh, did we just miss it in this moment, right? Now, what's painful is that I can't tell you. I don't know. I don't know for certain, right? But here's something we do know for certain, right? We know as traders, the only way to be long-term in the game and survive is to wait for times where risk to reward makes the most sense and where we can find opportunities that give us opportunities that, again, we patiently wait for. They give us good risk to reward. It's an educated guess. So for me, I actually, we talked about this earlier. I like the idea of a move down to 38.2% retracement, this 3,040, maybe as a try attempt, number one, for gold. So did I miss it? Maybe. And Bulent, what you're explaining is something all of us feel, right? You have an order out there. You're like, okay, maybe like, let's just take my example here. Let's say that I want to get long gold and I like this setup and I'm sitting here and I was ready to buy. And let's just say that the most frustrating case happens. That was the low and gold is up here by tomorrow. I mean, it's a fair question. Like, what do you do in that situation? That's so annoying. I'll tell you what you can't do. Well, what I can do, what I won't do, is I won't chase it just because I missed, right? I can't do that because what am I doing? If I'm looking at gold and I want to go long gold, right? And I have my reasons and I mapped out where it makes sense for me to take the trade, and then it starts moving without me and I panic and just buy, what did I just do psychologically? I just broke my rules, right? Breaking rules is like at the end of the day, the market's going to be there tomorrow. It's going to be there the next day. It will have a big sell-off sometime in the future. It will have a big rally sometime in the future. But if you chase today, what you do psychologically is you tell yourself it's okay to do that. When you give in to FOMO, you give yourself permission to do that again in the future. And why that's dangerous is that you may chase this and maybe the risk to reward is no longer as attractive. And what you do in that moment is you say, oh, it's okay for me to chase. And worst case, you ready? This is the worst thing that could happen. You chase and the market moves in your favor and you make money. Why is that the worst case? Sure, you might make money on this trade, but what did you just do? You just told yourself it's good for me to break my rules and chase. And in the long run, that will come back to bite you. Okay? So that's my opinion on the matter. I only want to be in trades that come to me. I don't want to chase anything. And if I miss something, it's annoying. There's no question. I'm not going to tell you like, oh yeah, you shouldn't let it bother you. It's annoying. I hate when trades run away from me too. I'm not going to say that I, don't feel that. But what I also know is that I would know in my head internally, if I chased right now, if I chased right now, I would know this was not a good trade. Even if it results in a P&L, and I know. When you go to the gym, and I don't know if you guys go to the gym or not, but if you do, one thing that always stuck with me is I worked with a trainer at one point, and he just pointed out that if you cheat in the gym, who are you fooling, right? If you get away with doing less reps in the gym, right? You trick yourself in it. Who are you fooling? Only yourself, right? Because you're not going to get the gains that you want if I'll do it. I'm not going to do another set, right? I'm going to head home earlier, right? So my point is, same thing in trading is if you give into, your emotions, if you give into making foolish decisions, that will come back and bite you in the end. But if you stick to your system, you manage risk, you make educated guesses, and you show up every day and you take the beatings like the rest of us that are doing this. I've been insane enough to be trading for 8 years, and I'll probably be insane enough to do it for the rest of my life. I like it. It sucks sometimes. Today, my account's down a good bit with the big sell-off that happened yesterday. I bought tons of stocks. A lot of those stocks went red. Am I worried? No. Those are long-term buys that I'm not too worried about. I like the companies. It's not like I'm buying penny stocks. Companies that I know will, in the long term, do quite well. In short run, things are ugly. In terms of gold, am I worried that thing is bouncing right now and I liked this trade setup, but it didn't come down to my level? I'm annoyed. But here's one thing that you can really take home with you today, okay? As you go home from class, as class is dismissed in just a little bit here, PMI is 8 minutes. Don't worry, guys. It's still coming. As you go, if you take this with you today, oh shoot, I'm going to forget where I was going with that. You guys distracted me. PMI news comes out in a couple minutes. Shoot, it was good too. It was a good point I was about to make. Hold on. man, I think I lost it. Don't worry. Let me just keep going off on tangents. I'll come back to it. If you haven't noticed, I do tend to repeat myself like pretty frequently. It's part of the trading journey. But if you're insane enough to do this, what you'll find is that your system, your strategy, your rules, they're all you have in the long term. Because when stuff hits the fan, right? When you have massive sell-offs in markets and drawdowns and painful stuff happening in the markets, like, look, that's never going to stop. If you're here for the long term, to trade for the long term, first of all, you're insane. Second of all, you kind of get used to it. Okay, I know what I was going to say. It came back to me. The thing I was going to say is that no way, I just lost it a second time. I got too many thoughts today. Gosh, dang it. That's never happened to me before in my life. I had something in my mind and then I forgot it. And then it came back to me, but before I could say it, I lost it again. Guys, I think I might be losing it. Actually, I'm going to blame this one on Alan because I read his comment. He said, Nick, did you take my egg USD call out? What was your egg USD call out, Alan? Did you say go long egg USD? Is that even can you actually pull up the egg prices with egg USD? Where are you looking at that? I don't see that. Oh, wow. It's crazy. Appreciate your thoughtful response. Appreciate your question. Trump tariff really hit Nick. Yeah, it really hit me. See, what happened to me is yesterday when the tariffs announced, they announced all the countries getting their tariffs, but at the very end of the list, it was Nick's brain capacity tariffed by 25%. So I now forget 1 in 4 sentences. I'm not old, man. I'm still in my 20s. You guys are stuck with me for a long time. There's like some people celebrated my April Fool's Day video where I said I was leaving YouTube, and they were like, "Oh man, I was popping champagne, and then I realized it was April Fool's," and I was like, you best unsubscribe, because I don't know if you guys have ever counted how many pieces of content we put out, but like if you dislike my content, man, I must be so annoying on your feed, because we post a live stream, a video a day. So that's 2 pieces of content. Yesterday we did 3. We did live stream, video, and then I did another video following the tariff announcement. Dollar index still down 2%. Watching euro. Let's see, where are we at with euro? Euro I'm going to hold on to. If it does rip to 1.12, we'll keep an eye on this. Nick is legit. I appreciate you. I appreciate you. Are you still in Tesla and Meta? Yes. It stinks. Actually, how's Tesla doing? Come on, Tesla. Okay, down 3.8%. I will take that. I'm still positive on Tesla. I bought Tesla prior to this bounce here. This is an interesting conversation because Tesla is like probably the most controversial stock in the market right now. Right now, and then in the last 10 years. It's always a controversial stock, not just because not because of Elon Musk. I mean, now that is added to the mix, but Tesla has been controversial long before Elon Musk was so center controversy, because the stock is valued super expensively. And some people say it should be valued super expensively because it's building the next generation of technologies, AI, robotics, self-driving stuff. It's it's the leader in electric vehicles. Look, I'm a buyer and believer of Tesla over the long term. I bought stock recently in Tesla. And my thought here with Tesla is I like it a lot. But the controversy stems from its valuation. Some people think it should be valued like a car company. Other people think it should be valued more like a tech company. So it's always been a debate in the stock market world. And then, of course, it got more controversial with Elon Musk taking kind of a central government role, or at least maybe not a central, but, his role with Doge and all that. And yesterday, there was actually a data point or a news report that Elon Musk was going to be stepping away from the Doge operation at some point. Or it was Trump saying that, apparently. That later got not proven to be fake news, quote unquote, by Elon Musk. I think he tweeted about it or posted on X. And so I was actually really excited about that news because here's my opinion on it. Elon Musk doing the Doge thing. Cool. Also, let me not miss news. Hold on. 20 seconds. I'm not going to miss it. Look at that. I did it, guys. I didn't miss a news report. I am on top of things. Do not let me forget where I was with that topic because I want to come back to Tesla. Breaking news. Services PMI is out in just a second here. Let's see if it causes any sort of stir in this market. 50.8. Oof. 50.8. And still not really moving the market. This market is so focused on the tariff stuff that it forgot. That's not a good number for services PMIs, I'll tell you that right now. Services missing big old time right here. 53 expected, got 50.8. Outlook for services still expected to grow, but at a much lower rate than expected. Interesting. See if that moved the dollar at all. DXY. DXY continues to move lower. Dollar index lower. Not so bad for the euro idea. Look at euro, man. Let's go. Keep going, euro. Give me 1.12. Give me 1.12. I actually had interest in buying the euro at lower prices, but it never even, I got my first entry in and never came down to lower levels. Just took off here with everything that happened in the last 24 hours. Nobody cares. But yeah, that's an interesting, I'm shocked that there's not more of a reaction to that, but I suppose the market is so fixated on tariffs that it's almost like everything is secondary right now. NASDAQ's down 0.86% on today, but of course with yesterday factor in, you can see the big difference on Qs, right? When you look at Qs, there's the real number, 4% from yesterday's close, right? Huge sell-off after hours. So we'll see if it gets any kind of bounce back, but that data point there, services PMI, definitely not helping the story. Weak for the US dollar. VIX 25%, still very, very sharp. Okay, I'm coming back to Tesla because I want to talk about that. So Elon Musk doing all the Doge stuff. It became a super controversial topic. And I think that part of this, if anybody is familiar with Dan Ives, he's an interesting character. He's one of the most notable analysts on Wall Street that has been bullish Tesla for the longest time. People tease him for being an idealist and being, overzealous about this stock and a perma-bull about this stock. But he makes some good points. And he actually came out and criticized heavily Tesla. And when somebody is very, very attuned to a stock and they call it very correctly, sometimes it's worth paying attention to what they have to say. So Dan Ives, super bullish on Tesla for the long term, still loves the company, but has come out and said basically Elon Musk needs to come back to Tesla. And I agree. Elon Musk is a brilliant CEO, and I recognize, and I think most people, even if you disagree with the approach of Doge, I think most people agree like national debt needs to get cut in many countries, the US, UK. This world has a lot of debt. So I think most people are like, okay, that's cool. It's a valiant concept. People disagree heavily on how you approach the debt. Totally understand that too. But there's some criticism here, right? I'm a Tesla shareholder. I love the stock. I love the product. I don't have a Tesla. Maybe in the future I'll get one. But the robotics, the AI, I like what they do. They innovate. But it's kind of like, for me, it's like kind of when Oprah Winfrey, right, started talking about running for president, and she quickly stepped away from that because she was like, oh, this is going to destroy my legacy, right? The concern with Tesla is you might like Elon Musk more for what he's doing, or you might dislike him for what he's doing. But the point is, he went from somebody who was a very, very respected CEO and still is a very amazing track recorded CEO. The dude's a billionaire. He's an incredible CEO. Very innovative, very, very good at what he does. But then his legacy, the issue is, the question, the big debate is Tesla taking a hit because of his limelight in politics? And that's the question. So we'll see. But I do hope as a shareholder that he does make a move back towards Tesla. I know he's mentioned in the past that that's something he wants to do. He's said on camera that, you know, the bigger picture for him is he wants to get back to making cars and rockets. And I hope he sticks to that, because I think Tesla could really use him right now. So again, I love the product. I've made a lot of money over the years in Tesla stock. It's a very hated stock, but you know what's interesting is a lot of time hated stocks actually do quite well because people shy away from and you know, hate the underlying product for reasons that don't necessarily, you know, you might have a bias against the stock, but the product, I think, is phenomenal. I think it's an incredible, innovative company. But again, doesn't mean it can't have some uglier days ahead in the meantime. Tesla's gotten hit really hard, down at one point 55% from the highs. So it's been an ugly, ugly ride here recently, pun intended, ugly ride. And I do, like I said, as a shareholder, I hope that there is at some point a move from Elon Musk to get a little bit more focused up on Tesla. Doing the stuff that he's doing at Doge is probably taking up a tremendous amount of his time, and his time is very precious to Tesla shareholders as well. It's a stock I like. I think he'll come back to Tesla. That's why I bought some of it recently. It's not the only reason. I like the company for the long term. I think, you know, is it valued very expensively? Absolutely. But so was Amazon for the last 20 years, right? Great companies oftentimes do get very high valuations. I also owned Amazon. Amazon's had a super high PE since inception. It's had a high PE for its entire existence. And look at how the stock has done. So I think if something's very innovative and doesn't have necessarily the profits to justify it today, does not mean that it can't have it in the future. So just something to think about. But services PMI coming in, definitely not a help to the story here. Services coming in soft this morning, 50.8. Adding fuel to the flame, if you will. When it rains, it pours, right? Markets are under a lot of pressure right now. The tariff stuff yesterday. You had some good labor data yesterday with ADP coming in better than expected. Unemployment claims was a good number. No spike in unemployment stuff at this time. But outlook looking a little bleak. Consumers concerned. PMIs. Let me see really quick. What do we have? Let's do a refresher. Manufacturing PMIs. PMIs came out April 1st, 49 compared to forecasted 49.5. So again, the indices are completely off the radar for me with that. They already were off the radar from a technical perspective, but now you've got services and manufacturing PMIs both pointing towards lesser growth. This I trust a lot more than just consumer feedback, right? We've had a lot of consumer stuff like, oh, people are, but people oftentimes will say one thing and act a different way. So what I'm talking about is consumer sentiment, right? We've had some negative consumer sentiment. Let's see if we can get some market sentiment. Actually, we should add this consumer confidence. Let's pull that up. So consumer confidence has been coming in low too, right? People a little concerned. But the average consumer citing that they're concerned or that they're worried or that they're saving money, that does mean something. And I don't ignore it, but I really focus more on the PMIs because this is, of course, key hiring representatives for companies and people who hire, people who spend money, who see order flows for their corporate actions. Like they have some good data. And if they're coming in and saying economic contractions looking like it might be there, look, I can't ignore that signal. And that makes me stick to what I know, which is that systematically that should reflect in the EdgeFinder scoring. And there it is, gold. Gold continues to be my favorite trade idea of the year so far. You're getting a nice bounce back here today. I'm going to have to wait for a pullback. I might get it. I might not. If we see a reversal down to some key levels, 38.2 to 50%, if we see this move, I'll probably buy some gold. But if not, I'm just going to sit on my hands. If gold wants to do another leg up before pulling back, then so be it. I can wait, right? So I'm just going to wait on that. A little frustrating. Almost came to our level here this morning. Silver's also getting hit hard here, down 4.7% today. Yields are really getting hit today. Dollar index is lower off of this. Euro dollar trade's going really well. In fact, like I said, if this does another punch higher, I'm probably going to just take profits on this and look for a pullback. Kiwi dollar sold out a little bit too soon. See if we can get in on that on a pullback. But I've been using the Top Setups Eco page to find Forex trades that I like. So if I actually scan this for major and minor currency pairs, you can see some of the trades that I'm in right now. Euro dollar is not actually as attractive as I thought it was. Services PMIs, well, that will actually flip slightly here today once that data comes in. CAD Swiss, I'm long. Kiwi dollar, I was long, took profits on that. So based on this list, I might be looking at pound dollar on reversals or pullbacks, I mean. Let's flip this to get our bearish readings. Dollar CAD, Euro pound. What's Euro pound doing? That's a currency pair I love to trade. Euro pound. Ooh, we might be looking at some Euro pound setups today, guys. For those in the Discord room, I might keep an eye on Euro pound. Going to watch this one. I like this area of resistance that we might be coming towards. I took a very modest profit on this one when it headed down to this area. Took some profits on this one. I mean, it was not like profits. I think I had a short like here, short here, and a short here. I think I took profits on the whole thing, and it was a very small winner overall. So when I look at Euro pound now, fresh push back up here, I'm flat on the position. I don't have any Euro pound shorts. This may actually start to look attractive to me for some setups. I mean, I'll tell you what, I'm loving the currency setups right now. There's I've got one loser in CAD Swiss, a winner on Euro dollar, a winner on Kiwi dollar that I closed, but Euro pound setting up, we got a lot of opportunities here with top setups here for Eco. By the way, guys, thanks to the producer for dropping that. EdgeFinder currently is 45% off. It's our biggest sale of the year. If you're looking to start trading with the fundamentals, with the economic data, I highly recommend you don't miss this opportunity to pick up a copy at the lowest price that we do all year long. EdgeFinder does not get lower in price than this. 45% off if you send us a direct message while we're streaming. clicking the link that's just been dropped in the chat. Euro pound, once euro dollar hits 1.12 would be a super nice trade. Yeah, Alan, I actually like that. So we have, I'm long euro dollar, right? So maybe I ride euro dollar up and euro pound down. That would be the dream. We'll see if I'm able to do it that way. But more likely, how I would approach euro pound would be initial short position at these levels with willingness, if the fundamentals still look good, to pick up another short position around 86. So, euro pound, why do I like this currency pair so much? There's two main reasons. One, it's very choppy, and I love chop, right? If you're trading a mean reversion strategy where you don't have a tight stop and you're rather just dollar cost averaging, mean reversion loves choppy markets, right? Because then if you're trading buys over here and then taking profits, right? And then buying and selling and buying and selling, like it's that kind of market where it actually does well to buy and sell, buy low, sell high kind of concept. It doesn't trend massively. And the second reason is because the moves are just not that large. This whole huge move, right? That's a daily chart, guys. 400 pips. That is very accommodating if you're dollar cost averaging, because 400 pips as a big move with small sizing, that's not going to wipe you out, right? So the other thing with Forex is I'm more long-term in nature with Forex. I'm not like scalping or day trading. I find that to be very difficult in trading Forex. There are people out there who do it, and shout out to you if you do it. But Chris Pulver, someone who I interviewed, I mean, he comes on the stream all the time, but I interviewed him a couple years back and we talked about Forex, and he talked about how, he employs a dollar cost averaging approach on Forex over the long term. And I was like, that's fascinating. I do a little bit of that myself. And we talked about it. And that podcast is still up on my channel. You can find it. Just search up Trader Nick, Chris Pulver interview, and I'm sure you can find it. But, really interesting, like that concept of basically trading Forex with low leverage, looking for extended levels, mean reverting, dollar cost averaging, etc. I love that video. Alan, yeah, I figured you might have seen it. It's a great video. Chris Pulver, I was talking to Boris Schlossberg, I think that's how you say his last name, on the phone from BK Traders. I was talking to him on the phone the other day. Him and I are friends. And if you know Boris and Kathy, fantastic traders, very real. Boris and I were talking about it. We were just talking about Chris Pulver. We were basically saying the dude is the most real trader I think I've ever seen on YouTube. Like, there's a couple of us that are, there's some, it's like the Jedi Order, right? Where they snuffed them all out across the universe. There's a couple good Jedi out there. Okay. Chris Pulver's one of them. Dude's very transparent, very real. And I'm a marketer, right? Like I market the heck out of everything I do. There's nothing wrong with being a marketer or a salesperson. Chris Pulver's not that. He's not a marketer. He's not a salesperson at all. I am not Obi-Wan. Obi-Wan is like the purest soul, right? If you watch my streams and videos, I've always got something to sell to you, and I will never say otherwise. Like I've got great products that my team and I have put so much time and effort into building. I'll never say we don't have something to sell. Chris Pulver has stuff to sell, but he's so like much of just a pure trader that like we've actually helped him with doing some of his selling. Like we help market Chris Pulver because the dude is so good at what he does on the charts, and he's so clear about what he's doing and how he thinks about things. It's a fantastic, thing to have him on our show, which I think he's supposed to be here in any second. But yeah, we basically have to help market him because the dude is so focused on just being a straight up trader. But yeah, no, there's nothing wrong with marketing in the trading space. That, I mean, I believe that through and through. Some of my favorite traders and creators in the past that I have invested time and money into learning from were game changers for me. They were real traders, real verified results, great products. You can do both. Like great traders who verify what they do, I think their products are worth anything you spend money on. Obviously, I'm a little bit biased because that's what I do, but I genuinely mean it. I would buy other people's products if I was back in my old shoes from when I first got started, right? If somebody would have, shown me their trading results and said, "Look, stuff is hard as anything, but if you really want to learn, here's how I do what I do." And if I related to their style enough, I would buy what they had to sell. No question. Because it's such a shortcut. It is, if used correctly, buying products from creators in the trading space that have results, that is the key to all of it. People who show you real trading accounts, like myself, right? Like Chris Pulver, right? There's something of value there, and you can shortcut your journey. That's worth it. But what is terrible is when people spend a whole bunch of money on people that have never proven anything. Be very careful with that, because then you could just be spending a bunch of money and learning from someone who hasn't figured it out themselves. There's nothing of value there, right? That's the important thing. Yeah, Alan, that's also what Boris and I were talking about. He's the realist dealist, right? The dude is a very real trader, and he doesn't have a huge following. That's kind of YouTube. And I hate to say it because, on my channel, I absolutely do my best to get content to do well, right? To put thumbnails and titles that get clicks and views. And, we have something for sale always in our videos, but it's things of value. And the difference is, if you're going to buy from someone something in the trading space, I think it's worth it. The amount of time and effort that are poured into like Chris Pulver's approach to markets or my approach to markets, countless hours. So if you can jumpstart your own trading and learn from that, if you're like 3 weeks into this, tens of thousands of hours. If at the end, I always had this thought: when you die and you go see God, if you believe in such things, you know how you always had that question, like, what if you could ask like your stats, like when you pass on, could you see like your list of stats about your life? Like how many times did you go to Subway or something? I don't know. Like how many times did you ride in a car? I want to know my stats on how many hours have I invested learning and actively trading. It's got to be month time. And Chris Pulver has me beat on that. That's for sure. He's coming on in just a second. We're going to pass the show over to him. I got to get off here. I've been on live for a couple hours. So, and I actually have to go jump to a podcast. So if my voice gives out by the time you guys see a video from me, all I ask is you like the video. Up next, we got Chris Pulver taking over. Like I said, probably one of the realest traders on YouTube. So stay tuned. He's coming in just after this quick break.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Hey everybody. Happy Thursday. Welcome to the bloodbath. I'm about to set some trades up for some out of the money puts. The IV range has jumped up from around 39 to 63. We're getting a big spike in volatility today. So here is your VIX. jumping up into 27.75. It could obviously get worse, but still around this level. And the way that the IV rank has jumped up on SPY, this is an instrument that I don't mind owning some shares of. I've got some big enough accounts to stomach it. So I'm going to sell a couple of puts and also do a wider spread. This has about a 97% chance of profit right now. Obviously, if volatility increases, we could see, 460 is quite a bit lower. I don't think this will be out for 88 days. I don't think we're dropping in a straight line on the SPY. So 460 is way down here. This is a 465 5-period moving average on the yearly time frame, and then also we have the previous historic highs at or all-time highs at 480. I don't think the market's going to move in a straight line. Okay, I think if the bulls are lucky, I just got out of a live session this morning, but if the bulls are lucky, there's a little bit of a fight left to at least square this up in some way, shape, or form. So if this is a drop retest of these lows before the market continues lower, or the bulls can fight back and try to fill this gap from that ridiculous tariff announcement yesterday, which didn't really surprise me. I think that if you didn't take Donald Trump seriously with his claims on tariffs and trade wars, now you do. The market clearly didn't price in tariffs. And the market is possibly, because it's forward thinking, going to be pricing in things that are much worse because tariffs will impact the entire global economy. If we are blanketing tariffs for pretty much every country, like there and there and there and there and there, this isn't good. This is so much friction added to the global economy. This will affect earnings, and that is why this next leg lower could be justified. So does that mean that I'm running for the hill? No, I'm just selling premium, taking some nibbles, which is what I did when I wanted to de-risk. This market will likely not move in a straight line. So even another aggressive flush lower will probably be met with some type of short-term rally. Does it come all the way back up here again? Sure, but I am selling levels up here. And I took a couple of synthetic positions, which basically it's easy. I buy a put, and I sell a call at the same level, and I give myself about a $10 to $11 buffer, and anything to the downside is one. It's a -1 delta. So it's the same as shorting the stock without having to take on the margin effects of shorting stock. So you buy a put, you sell a call at the same strike, you collect your credit. I did this on XSP, so it's cash settled, so don't want any assignment risk if price goes higher. And if we go lower, and I was just looking at the average of around 480, and if we have a big swell in applied volatility, I paid $32 for my put. Okay, now I paid $32, but the net trade was $10 credit. So I actually have credit on the trade, but I paid $32 for the debit. If we go from 543 to 480, that is a $63 move. Okay, now that $63 move with implied volatility could also jump up a lot faster if we get there in let's say the next couple of months. So point is, I mean, I have hedges. That's probably the best thing running for me right now. And other than that, it's pretty crappy. So right now, hedges, I'll get these on for the SPY. I've got about $12,000 in hedges right now. And also I'm up on FXY, another couple $1,000. So probably 13K in hedges right now. And then I just took a synthetic position on the SPY, which is up around $5,000. Where those I've got to go in and sort these because I just put them in this morning, but I'm going to put on a couple more trades here. So I'm going out 88 days. Let's go to, let me highlight this so all these accounts can get some love. This will be that account. Let me go. All right, I'm going to go just the put side first. So 460 on a portfolio margin account should be only tying up around $1,100. Perfect. So that trade's going to get a hopefully a 420. Let's go 425 credit. 425 not filling. 424. Bid is 421. All right, 423 just got filled. And this account, Okay, I want to take a look at the Dow. Since it is price weighted, not market cap weighted, the Dow is down. I'm looking at the same thing on the Dow. Maybe selling a put on the Dow, depends on the premium, but somewhere in like the 360 zone. Dow out to June, 360. Another one here for 340. Okay, sell some premium there. So let's go 345. $345 got filled. Okay, so let me get those added in. This is SPY, PM accounts, and DIA PM accounts. So that's a 6:30 expiration, 360 sell put for $3.45 to $3.53 credit. And the SPY is a 6:30 expiration, 460 for $4.23. Okay, so I'm going to take these same trades and put on some spreads with my other accounts, and that would be 1, 2, 3, 4, 5, 6. Those accounts right there. Okay, so let's go to June 30th, end of the quarter again. On the SPY, I'm going to start my leg at 460. So I'm selling the 460, and I'm going to buy the 410. So I'm willing to take on that risk. I can go down a little bit lower. Let me see. I guess if I get $2 for the trade, let's get $2. Okay, so 420. See if I get $4 or $2 for this trade. $2 for this trade. There is risk on this. I don't intend to take the assignment. There's still about a 97% chance of profit that with this kind of overshot IV rank that could grow. We could still. If you thought that 2024 is the year that had like the highest VIX on record, I just don't know, right? 2022 was actually pretty contained with the VIX, highs around like 35, but it was a bear market. This was like a one-off event. That was kind of your 2018 Volmageddon we had in 2024. You got to wonder if we come up into the 30s again before it reverts and this market, has some like legs lower. I don't know. I don't think it's going to be a straight run down. I really don't. But I don't think this is a good sign for the bulls at all. So anyway, all right. 460 by 420. Let's see if I get $2 for it. So let me get these accounts there. $1.99. Try to get filled at the mid price. As long as I get $1.95, I'll accept the trade. $1.98 got filled. Okay. 9072. $1.97. Okay. Come on. $1.95, $1.96 got filled. Okay, good. 3.5. Okay, $1.95, $1.96 on those. That would be SPY, IRA accounts, 6/30 expiration. Sell the 460 put, buy the 420 put, $1.95 credit. Let me take the same thing on the Dow. Might be a little bit less premium, but let's have a look. So the previous trade was a 360 sell put. So I'll start there again. 360. So go 20 wide. If I go 30 wide, it's not bad. I go 30 wide, take a little bit less risk and buying power and still make the same premium. It's not bad. Let me go 205 here. So 3, 4. So we get 205. Good. Okay, getting there. Okay, 205 on that one. So that's DIA, 6/30 expiration, sell the 360 put, buy the 320 put. So still going 40 wide, but collecting more premium on the Dow, which is surprising. 205 credit. Okay. So a couple of add-on trades there. And let's check some questions here. Trump tariffs. Good. I mean, if you're trading, I mean, it was a big move in the futures market yesterday. It all happened. I mean, here's my futures feed. Let's go. So this was yesterday. We had that. So it was interesting watching the headlines because the headline said 10% tariffs. And I was like, actually, that's okay because everyone was talking about like 20% across the board, 25% across the board. So the headlines led with a 10%, broad tariff. And then it was boom, just the, reciprocal tariffs, China, 30+%, blah, blah, blah. This is the, American economic expansion, boom, whatever the hell he's calling it. And the market just freaking dumped. I mean, it literally rallied all the yesterday to a point where I was like, okay, we took out these highs. We swept this little pocket. I'm like, we're actually clearing some of these levels. And then just, nope, 15 minutes later, it took back an entire rally for the day. And here we are, no better off. I mean, it's down to the same lows. Now, as I said, I don't think this market goes down in a straight line. Okay. Everyone's freaking panicking right now. But here's my take. Okay. Everyone wondered if the market priced in tariffs, and the answer to that is clearly no. But are they priced in now with a one-off move that's probably a 2+ standard deviation move? Maybe. I mean, I can't tell you the last time that I saw a 4% gap in the market. I mean, I'd be thinking, this gap right here was a gap of around 1.41%. So we had a 3% plus gap on the S&P. We had a 4+% gap in the NASDAQ. Last time I saw that would have been maybe 2022 or probably COVID. So point is, on the technical side, look, I want to have protection. Prices will settle in. The reason I'm showing so much red in my portfolio right now for my P&L on the day is because all of my option prices have been changing. So, I mean, I'm going to comb through my portfolio very, very carefully. And I'm still going to take some bites. I mean, I've got plenty of cash to deploy. I'm gonna wait, but I do have some hedges on that I need to pay close attention to. So, futures hedges up around 12 grand. JPY hedges doing well. Let's take a look at gold and silver. I mean, GLD is up $18,000. So let's just go top down. Did you cover? No, it's a sell call there, pimp. So if you do a synthetic short, you buy a put and you sell a call at the same strike. It looks like this. So I bought a put. I was in this morning at a 546 put, so I bought the 546 put on XSP. It was an XSP trade. So I traded an XSP. I've got it right here. So it was a 116 expiration. So we went out to January. I'm not messing around with the timeline. I'm like, if this market's going to dump anywhere in the next, 30, 60, 90, 120 days before we get to the end of the year, let's hopefully take advantage of it. So I bought the 550 call. So 550 call, and then I'm sorry, I bought the 550 put, sold the. There we go. So buy the 550 put, sell the 550 call. Looks like this. There's my short. So I actually collected credit on the trade. So my break even's up here towards like 558, 559. Well, that's what it's showing now. I collected $10 a premium on the trade. So my break even's around 560 before I take in any risk, which is fine. I'm willing to take on like a 1 to 2% drawdown for this trade. But if we continue to flush lower, that's, there's unlimited profit potential here. So realistically, if I turn this into like a $5,000 per account, I mean, I did this on like 13 accounts. So if I've got 5K on all accounts, I mean, I'll make, I'd say between 50 to 60 grand in this trade. If needed, that's going to help alleviate some of this, right? So trade through it, let the IV, do what it needs to do, settle back in. Some of these trades and expirations, high probability trades, but I can wash away a lot of this pain, which is all kind of looking at it like there's not much I can do. Like it's just when IV goes from, we had a IV rank yesterday around 40, and today it's 60 plus, right? So that swell in volatility, when it expands, that swell in volatility for long options is good if you're in the right direction. If you're long calls, you're getting trashed. If you're long puts in hedges, like my futures trades, I'm up, some decent profit there, but I'm holding them for, the market to go lower. So it's going to be a balancing act. It's not going to be easy. Nothing about this market's going to be simple right now. If we're lucky, I think the bulls can have some fight, and the bulls would just simply, okay, let's say we flush down here. Let's talk technicals. We have a high to low. Okay, the market pulled back to a 38% fib. All right, so I want you to note a couple of levels. These are key levels right here. This previous all-time high, right around 4,800, could be a major level support. Major level support. Okay, 5,000 is also a major level support because it's a round number. This extension around 4,500 could be the destination of this decline. Anytime I've seen, this is Forex too, but anytime I see fibs that go to 382, it's not stopping at this first 618, it's the 2618, which is all the way down here at 4,500. Right now, I don't know if this is going to be exactly what the market does, but I would imagine that if we have a 382 retracement and this market pushes down to like a 127 area, that we may have a pullback into the same low again before the market gets rejected, or the market, if we're lucky, pulls all the way back into here for some type of flat pattern, and then the bears continue to resume this trend, right? But it is unlikely this drop is going to be a straight line. If it is, obviously that'll be something historic. That's probably never ever happened outside of COVID. But it could be like a nasty 30 to 45 day cycle. If this one just dumps and dumps and dumps and it just feels like the pain won't stop, it's going to get ugly. But what is also creating an inefficient move is likely going to have the reflexivity and elasticity to come back and find some type of balancing before the resumption happens. So like I said, I think if bulls are lucky, the market is going to go down here, fight back a little bit to find these lows or find this, find this gapping area, because this is a massive 3 to 4% gap that I think will be a target at some point. But I just don't think getting bullish right now is the play. Bullish now is not the play. Bullish in the short term, if you're lucky for the market to come back by Friday and try to retest the lows, maybe. But I mean, we are in no man's land, and this is the level I've been talking about for several weeks now. If we break this level, this does not look good. this is probably the most concern that I have for the market structure, is that we're breaking below this major support and there's nothing to stop this thing. August lows, April lows, previous all-time highs. That's it. If you talk about support, I mean, if we're lucky, there's some support in here, if we're lucky. But that's about all I see. So definitely putting the portfolio in defense mode, getting on additional hedges. I'm running a crash insurance masterclass today at 4 p.m. for this exact reason. I just think that, obviously if you don't insure your portfolio, you're going to be in a bunch of pain if this market continues to drop another 5-10%. And it's usually not the first pullback that hurts. It's the second one. Right? It's not this that hurts. It's the flush lower. That's another 10 to 15% lower. It's this swing that most traders get crushed by, because everyone's told buy the dip. So they buy the dip and they don't take any profit here. And then the market flushes them out and then they're freaking out and they're losing everything. So I'm in defense mode. Right? So all I'm saying is be defensive, trade smaller. If you got the cash to deploy, I'm selling premium, taking good trades, good stabs to the market, and I'm going to do my best to survive. I mean, regardless, whether I'm red or green, I will show it. I'm trading live through this market. So if that means anything, I mean, I'm in this for real, and I've got clients that I care about and look after, and, we're going to do our best to survive this crap. So if at the end of the day, this market is down, 15 to 25%, and I'm down 0 or 5%, or even somehow clinging to gains for the year, I consider that a pretty big victory, despite basically not getting paid on anything performance-wise. But fighting the market, I mean, that sets me up for a much better road ahead as far as like long-term success. I haven't had to sacrifice any profits since like a Brexit Q4 drawdown in 2016. So it could be a while, but I did make a claim. I don't know if I'm going to do this, but I was saying, like, look, based on this current environment, I don't feel like I should shave until I'm back to all-time highs, but then I'm going to look like Grizzly Adams here probably in the next couple months. So anyway, let's go top down here. While I got you, let me make sure I've got time in the calendar today. We're good. Yes. Okay. And then I've got the 1 o'clock. Yep. Okay. So S&P heading lower, down 4% from yesterday's close. Nasty. We're down 4.6% on the NASDAQ. Nasty. We're down 3.6% in the Dow. Nasty. Russell down 6%. Yikes. Volatility index up to some fresh highs. We are not back up above the highs we had on the March 13th low. Not yet. I wouldn't be terribly surprised if we do see a VIX spiking up into the 30s. It wouldn't surprise me. And again, like, we never know this, but is this going to be some type of volatility event? Are we going to see some type of flash crash type move? I don't know. That's usually more common in Forex than it is in stocks, but there could be some kind of nasty capitulation. I still think this is a reverting instrument. So I'm picking my battles here. I'm not ready to do it yet. But if we see another big spike down in SPXY, I may end up buying some shares like I did here in August of last year. That Monday open, I bought shares of SPXY, and like 2 weeks later, they're up $10. So, I mean, it's basically, putting in about $4,000, give or take, to make $1,000. It's a pretty good return in a couple of weeks if we have a big reversion on the VIX, but to be determined. I don't know. I've got enough cash to do it. I'm just going to be kind of picky on, I don't want to see some volatility event where this thing, like, if the VIX spikes to, I mean, what crazy is the VIX spiked up to 60 and we're trading at, like, look at this, 42 weight in SPXY, and we're not even close, right? We're not even close to this spike. So I have no idea if this is going to be pushing up into the 30s. When we had a bear market, 2022, it was in the 30s. You go back here during COVID, it was up into the 30s and 40s. So we could still be, buckling up for a lot more volatility ahead. This really did rattle the markets a lot yesterday. Okay. Dollar index, again, gap lower. Euro dollars crushing it to the upside. I didn't even get my fill that I was after. I mean, it looks great. This second trade that I had limit at 106.50 is stupid to take. I'm just going to go ahead and take the profit. I'm only a couple I'm only a couple points off. I mean, I had to take profit at 1170. It's trading at 1120. I'm just going to go ahead and take the trade off right now for profit and cancel this other trade. That is a winner of like close to 300 pips or so. So currently up right now about 297 pips. I'm just going to take the money and move on. So closing this down for the win. Okay, let me actually, well, there's the trade. Grab a quick shot. This will be my A1 trading highlight since we took that trade together like what, last week? It wasn't even that long ago. So I'm going to take the profit here, closing, and then cancel that buy limit. And now my trade on the euro dollar is done. So, you know, could this be like this giant fundamental shift in everything and the dollar's just going to get absolutely smashed to the downside? Maybe. But based on how this thing fell, I mean, this could all be just a massive correction coming into some key support. Okay, there's inefficiency here and here. So don't be terribly surprised. This is why I said don't call the bottom. You know, everyone's trying to get, it's like I wasn't getting long the dollar. I said I wanted to see this thing fade back into where I wanted to short it and then take it lower. So I nibbled at the euro dollar with a pending, pending buy at a lower price euro dollar, which would be a higher price DXY. The dollar went my way. So everything's fine. But taking profit here as it's approaching this level. And I wouldn't be terribly surprised if the market is going to find some type of bounce here, at least use some support in the near term. But do not catch a falling knife. You know, if we break major structure here, one thing that's also probably a heads up trade to be everyone that's looking to short the dollar yen. Yay, maybe. I still don't trust this yen at all, right? But would anyone be shocked to see this momentum continue and the dollar does not act as a safe haven and this thing keeps sliding lower, coming back to these August 5th lows? I wouldn't be surprised to see that at all. Does that mean I want to jump in and sell dollar yen right now? Of course not. That's a terrible entry at these lows. But if you have a bear flag and a bear flag and a bear flag and we hit these levels, it's an easy sell. Okay, especially across the board. This is probably the yen. You know, I mean, Aussie yen in a different position, right? There's still some room to get back down to the flash crash lows. CAD yen still room to get back down and revisit flash crash lows. Swiss yen, you're getting safe haven versus safe haven, so probably not the best trade there. Euro yen had that big nudge, and it's all noisy. But again, if this one turns further south, we could revisit the flash crash lows. Pound yen, you know, a lot of chop, but still lots of room to get back down to these flash crash lows. New Zealand yen is going to be closer to flash crash lows. But dollar is weak. That's really why this looks like, oh my God, I mean, dollar weak. It's not everything yen. Take a look at your currency strength today. Okay, so Swiss on top, dollar on the. I mean, this is the first time in weeks, maybe months, that we've seen this much volatility. So this is, 4 p.m. afterwards when the tariff announcement was happening. You got the big spikes in volatility. Otherwise, this market was pretty well contained between like a, 60 downside and 70 upside, and then it got way wider going into post 4 p.m. announcement. And then today you're looking at just monster volatility, 140 pips to the upside and 200 pips to the downside. You've got dollar Swiss that has made, is that arguably a 300 pip move? Yep, look at that son of a biscuit. Wow. So I did get filled at 8,600, and I've got another trade down here at the lows around 8,400. Now, what I am loving about this trade, not much, but what I'm liking about it as far as the technical setup is this is a super ridiculous inefficient candle. So whatever happens here, even if this thing slides lower, Forex is notorious for efficiency. So we're probably coming back into this area in some way, shape, or form on dollar Swiss. But it could be uglier and it could be lower, right? Like we could be going all the way back down here to 83. We could potentially go all the way down to freaking 80. I don't know. Okay, I believe that the Fed watch tool has also called for a additional rate cut. I don't know if it's been priced in at all for May. Let's check the probabilities here. So right now there's still a pause expected, but now we have a June, July, September. So it looks like the Fed is being, I mean, again, this is a futures market. So this is just markets pricing in what they think. Pause. And then come May, June, July, or I'm sorry, June, July, September, cut 1, cut 2, and cut 3. And then possibly a 4th cut. Wow. Maybe. This is a little bit slim, but possibly a 4th cut into December. So we'll see. I mean, it doesn't mean the market's going to stop. I mean, I'm still kind of concerned that if the Fed gets really aggressive on rate cuts, that they do so and there's still sticky inflation. You know, I mean, the consumer can probably stop most of the inflation by just hunkering down and stop spending on crap. But we're the U.S. I mean, what did I read yesterday during this Trump tariff announcement? I read that car dealerships were lined up out the door trying to buy freaking cars before the prices went up. It's like, is that what you need right now? Is a brand new car? I mean, 2020 was like buy toilet paper and water, and now it's like I need a new car before the price goes up. Okay, I don't get it. And honestly, if you're going to buy a new car at a 6, 7, 8% interest rate, why? You know, I get it. Prices might go a little bit higher, but if your financing costs are down to 3% or 3.5% or 4%, I'd take that car as far as payments go and interest goes. But hey, whatever. Americans be crazy. So anyway, that's where we're at. So a lot of currency movement, a lot of volatility. Let's go gold, oil, silver. So dollar's obviously taking a big drop to the downside. It's doing so inefficiently. So I'm watching that support level at the 101 to 100 handle. If we go to let's go oil for a second. Oil is holy shnikes. What a rejection there on oil. Yikes. And this is why I'm not trading oil. Honestly, this could be the floor that breaks. This is another lever of inflation that if oil breaks this floor, this is probably good for energy prices to go lower, which is better for inflation to come down. Okay. So yeah, I mean, we're smashing right back down to the same floor. Maybe it stops here, but this is why I didn't believe this was going to be the bottom that holds. I don't think there's any such thing as, double, triple, quadruple bottoms. Double, yes. Triple, no. Quadruple, no. So this floor to me is if it breaks, we start sliding into 60, we start sliding to 55. We have a long ways to go to the downside. I mean, what's kind of crazy is let's say that we measure this move. And this is a little off here since we had this first peak around 129, but I'm going to go this move right here to oil. That's a slide, and then put symmetry in here. Okay. Oil symmetry puts us down to about 30. Oh, fudge, man. That would be crazy if we got all the way down to like sub 40 on oil. It'd probably be good for inflation. So if you check your third-party Trueflation, this might be smashed even lower. Nope, it was a 138 yesterday, 139 today. So this is one thing I'm going to keep watching. Like everyone's talking, this tariff stuff is going to be inflationary. It might be inflationary, but it's only inflation for the producers, not the consumers, right? Producers are the ones that have to face the tariffs. It's consumers that are wondering, are we going to have to buy more or buy the tariffed material, right? So I do want to keep an eye on this one because this is a lot more intense than just the CPI, PPI, and PC that we see every month from the government. So if this is, heading lower, it's probably a good sign for inflation to continue to trend lower. But it's also coming with the pain of the stock market dropping to fresh lows. Now the S&P is down over 11%, and probably more to go. So S&P from peak to trough, I think we've crossed into 11+%. We are down 11.7% on the SPX, NDX. I think we're down to 16+% now. We are down 16% on the the Nasdaq. Equal weight. Always curious that everyone's saying like, oh, equal weight's going to be way better. Is it? Equal weight is down 11%. Not much better. QQQE, equal weighted Nasdaq. Instead of being down 16, 17%, it's down 14%. Yay. Save a couple percent there. Okay, the Dow, peak to trough, not much better. All-time highs, we are around 9.8, 9.9% off the highs. Russell, bear freaking market, man. I'm glad I got to those trades in this little retracement. I had some 111s that I closed out for profit. Now I'm just going to start rolling calls down. I still have some shares of the IWM, but this is down over 20%. We're down 22.75%. And also breaching this previous level of resistance. I mean, the Russell doesn't look good at all. at all. So the trades I'm looking at for Russell would be if we come back down to like the 170 handle, then sure, I'll start taking some bites on premium there. That's about it. Okay, let me check some levels for the day. I saw 5,000 on my gamma levels. I got nothing here, right? I mean, this area could be defended. So I've got gamma levels that we're through. I mean, we breached lower. We could be sliding, all day to like 540, 530. Pain is in, but this is a monster gap that the bulls could fill. It wouldn't necessarily be immediate, but I'll still be watching. And then SPX, see where my big gamma levels are. I saw some scary levels today. 5,400 big level. I mean, short-term defense, sure. Like I said, if the bulls are lucky, market slides into like 5,400, maybe in the near term, the market bounces up. Do we get back to this gap and then fall? Do we actually try to fill this gap in any way, shape, or form? Fill the gap. It's not filled here, but it's at least a fight. It's not filled here, but it's at least a fight. The gap is filled way the hell up here at 5,650. It's a long ways away, everybody. We're like 200 points away from filling the gap. But the bulls, I mean, if this is remember, in futures, this is filled, right? This market drops straight down. This is the futures market, and it's still leaking lower. But I'm just saying, don't be a hero, right? I mean, if we slide to 54 and we bounce up, that's short term. That's market makers doing their thing, defending that level. I could see that. That's fine. From the open or the close yesterday at 56.68, down over 200 points. I mean, honestly, I could probably put in a freaking spread today on SPX. Take small risk because I think it's silly to be calling the bottom today. But I get it. 5,400 could work. So I'm going to look at a butterfly put spread. And right now, I mean, how ugly and how nasty does it get? I mean, if I can go down to like 5,300, we'd have to go from 56.70 to 5,300. We'd have to have a 370 point move today. Maybe. I'll see what the premiums are. Let me find out. So I'll put in a put fly. Move this to 5,300. And okay, so premiums are garbage. Let me see if I can slide this up a little bit. So where is it that I can get about 50 cents for this trade? So 53.40. Am I willing to take on this risk? 53.40 is currently trading around a 10 delta with current prices after the market's already slid X amount. This isn't a bad trade. Now there's a profit trap in here as well. There's still risk on the trade. I get about 30 cents there. I get about 50 to 55. Let me try to get 50. Get 55 cents if I can. Be generous. Spread is pretty wide. Let me see if I get 55 cents. 55 not filling. Son of a biscuit. 50 cents. Come on, be generous. Fill the 50 cents. All right, I'm in. I'm going to throw this in. So this is new trade. April 3rd, expiration. 53.45 put. Sell the 53.40 put. Buy the 53.25 put. Broken wing butterfly. Okay, so I'm throwing that in for 50 cents. There's a profit trap at the end of the day. I'll take this into closing bell. We're still trading with a very low delta, so the probability of profit in this trade is pretty high. But obviously, if it breaks through that 5,400 handle, then I'm going to potentially have some threat. But we have to go another 60 points lower, which again would be pretty ridiculous. So from 56.68 with a close, use a calculator here. 56.68. If I get my position threat at 53.40, That'd be a 328 point sell-off. That is probably a 2 to 2.5 standard deviation move. Crazy. It could happen. Anything can happen. But we'll see if this 5,400 at least offers a pause, maybe a bounce in the near term, or if it's just blood in the freaking streets and I just wasted another $950. Maybe I did, but we'll find out. So, all right, I'm in. Okay, that's synthetic short. Russell, I'm going to take some bites at Russell. If it come down to like 170, 175, I might actually look at it right now. Premium is super, super high. Let me see if I can get this trade out of the way. Honestly, it's probably a terrible trade because small cap could be just an absolute disaster zone. But based on the expiration, we're at a 68.9 IV rank. That's really high for an index. Maybe the 43-day expiration, if I can get my prices below like the 170 handle. So these lows are on 160. Let me see how creative I can get with this trade. It's so there's a big drop off. I go from like a 110 premium to like an 82 cent premium. Let me see if I can do like a 111. That's kind of garbage. I don't love that trade. I mean, it's a good probability of profit. If I wanted to say, look, I'm willing to own the Russell at 160, I get 50 cents on the trade. That's also not super exciting. That one's a little bit better. I'd own the Russell at 160. This is only a 43-day trade. We got a super high IV. It could get a lot worse. I mean, maybe this is a stupid trade, right? I'd almost be better off just because I don't think the Russell's going to make any money. I mean, either this is going to be like the Bulls have some, last minute fight to try to hold this level. I doubt it. Or we come lower. I'd be better off if I'm not going to take the trade. I'm always thinking if we come down to this level, then I start looking at selling the premium and I just stay way the heck out of the way, and then the market bounces. That to me is a better trade than trying to call the bottom now and just watch this thing. If it bleeds lower, my position is just going to take on heat for weeks. Even though it's only out 40 some days, I think it's a high probability of profit. I mean, I've got about a 96% chance of profit on that trade. So is it an income trade for $43? Sure. Do I want to take the assignment if I needed to? Yes, maybe. Do I want to? Not really. 165 would be my assignment price. Also, my trap is only $1, so that's even worse. So I'd take $1 off this and then $1.40 off of that. So I'd own shares of the IWM at 162, which realistically would be right at these lows. But I'll just throw this out there. I think there's a decent amount of support, but my biggest concern would be this. We have a high, we have a center low. If this is a double top, this market doesn't stop until probably COVID lows. That's a double top, right? If we break these lows, this market could be going way, way, way lower. So I'm going to say no thanks on the Russell. I'm seeing a lot of chatter on options. Look, I would, a couple things, right? Let me go quick options. Okay, for $27, if you're interested in learning some options to get you started, this might help. $27. You want to trade the market bullish? You want to trade the market bearish? You want to trade it with defined risk? Easy strategies. I'd be shocked if anybody watched this video series, if you watch this and didn't get a better sense of how to trade some basic options with the ability to trade these markets up and down. Okay, and then I have a full course that's up, down, sideways with some of my favorite strategies. But for $27, it's at least a starting point if interested. Okay, because I think, look, options is how I'm going to stay alive. Options is how this, red today is going to also become like this will fade. This drawdown will fade. These are, this is a big swell in implied volatility. And, this 25K that I'm still hanging on to will grow back into 150 to 200 plus $1,000 probably in the next, 3 to 6 months. I'm hedged to the downside. If those hedge profits pay out, I'm going to mitigate some of the pain by anywhere between $30 to $60, which offsets a lot of this trouble. So if it wasn't for options, I wouldn't be the money manager that I am right now. It makes my life manageable. I'm not going to say easy. Like, trading is not easy. And anyone that tells you this market's easy, it's because you only traded bull markets. This is what separates real traders from everybody else. This is not going to be fun. This is not going to be easy. Nobody knows what's going to happen. But I think this could help a lot of traders at least get your idea around the basic vocabulary, terminology, the practical application of options, which is if I just look at my chart and I think about this trade in terms of options, defined risk is going to be your best friend. And that way there's no stop loss hunting, there's no shenanigans, there's no liquidity grabs, it's just a defined risk of this line in the sand is whether I either make money or I don't. And I like that trade over the hunts and the fake outs and the spikes and all the crap that the futures market does, all the crap that Forex does. So options are great, and it's not that hard. And also, if you want to reduce a lot of volatility in your portfolio, then you can trade index options. So trade SPX or trade XSP, trade NDX. You trade ETFs as well, but index options are cash settled. You never have to have any assignment risk. So everything is defined risk. So if you're interested, there's the link. It's $27. All right. And like I said, if you like it, I'd like to see some feedback on it. I think that's a great way. Like I basically built a course like that for anybody that knows zero about options. Zero. So I gave that to my nephew that's 17 years old, 19 years old. They understand, some basic trades. Great. Mission accomplished. Now, if they're interested, they can learn more. So there you go. All right. I'll stay out of IWM for right now. I'm just going to go for a couple more minutes here before I wrap up. Keep an eye on the VIX. Dollar index just absolutely getting demolished today. Tons of volatility in Forex. Not a huge surprise. I think the next big leg of the dollar is either a stopping point around this 100 handle. Okay. Or this is the start of the, this is wave 1. All this is a nasty corrective wave 2. And then wave 3 has a push. Well, there's your 618. If we break 100, I mean, I don't know what happens here. Like if the dollar goes to 91, I don't know what that looks like in currency land outside of, well, I guess the dollar's the big landslide move. It's not going to go in a straight line. Nothing ever does. I do see these near-term inefficiencies that we've had. So I could see the dollar pausing, but there's clearly like a fundamental shift going on right now. And this has a lot of like scary potential. Like this to me seems like it is going to be an irrational move that I wouldn't necessarily want to fight. So again, just pick your battles carefully. But if this stalls here and there's a chance to go long, fine. Go long with a very tight stop, and I would have a stop reverse in case this thing's going to smash lower. Like this could be the master plan or the market's plan for the 10-year to go lower, everything to get cheaper with borrowing, inflation to get smashed back down because it's scaring the crap out of every consumer right now that nobody's going to buy anything. So if people just pause for a second and energy prices go down, dollar gets weaker, I mean, like these forces are big enough and fast enough right now that we're starting to see the effects. Like it's not a bad thing to see rates go down, dollar prices go down. But what I don't know is like, is this going to put the U.S. so far behind or in a potential recession that now it's not just some V-bottom recovery. Now it's going to take, potentially years to build our way through this. I don't know. And you'd like to think the markets are resilient. You'd like to think we still have some great companies, but this big rotation out of U.S. where we saw, Germany go up and Euro stocks go up and the FTSE go up and China go up. That's one thing I want to look at today. Are those stocks going up? Okay. Is DAX going up? No, it's freaking smashing right to the downside. Is China going up? HSI, any China stock? No, it's falling, right? Alibaba, it's falling. Baidu, it's falling, right? Like this market is going to be weighed by the US. So if the US is falling, it's going to drag everything with it. So this whole drop, if the US is going to prove resilient, it better show some resiliency sooner than later. Because if it doesn't and it gets worse and we see a 15, 20, 25% correction in the US markets, nothing's going to look good. And again, I don't know how this is going to be remembered, but who's going to remember 2025 so far, right? Uncertainty, 10% correction, Trump trade war. I mean, you thought Trump 1.0 was bad. Trump 2.0 is right in your face. Like you didn't take this guy seriously in 2016. Well, now you are, because he is literally doing what he said he was going to do, and it's coming with a lot more pain. He used to brag about the stock market. Now he's not saying shit about the stock market. Big difference. So, I mean, I've been following a lot of smart macro people that are, they don't turn bearish without having lots of data to support it. And the next leg of this trade is If earnings isn't impeccable, this market will be priced lower. Okay? So I'm just trying to give you a heads up, like, don't be a hero. Play defense, take your bites, trade mechanically, follow your rules, probably trade smaller, because if this market opens up with crazy amounts of volatility, nothing is safe, right? Direction, swings, like, I mean, today's a ridiculous move. Look, here's a good example. I took a trade on that little broken wing butterfly that has a 90% chance of profit. I could still lose on that trade today. You know, now if it gets defended, then great. So this trade I won this morning, I've got a 53.40 is going to be my pin price right here. So that's what I'm watching for the end of the day. So I took a nice little win this morning. This is my butterfly at 53.40. That's my pin price. So if we bounce, you know, we have this ridiculous move. We slid lower. We bounce off that 5400 gamma level, maybe. Right. And I think we should. I mean, at least intraday, like, this is a monster move. Market makers have been scrambling all morning to kind of get their positions in order. And most likely this is probably how they find it. If they get their positions in order, it means they open up here. They buy a ton of puts to offset their sell put levels to defend their market maker levels. And we'll probably sit here with this monster gap. The blood is already running all over the markets. And, you know, we look at today's price action, maybe a little bit lower, maybe a little bit here, and then that's the day. The day itself doesn't really do much at all, but it's the damage that's done from overnight, you know, and then tomorrow's a new day. So that's kind of the beautiful thing about zero DTE is there's still big pockets that are defending these levels, and they're pretty straightforward trading. Okay, all right, a couple more before I go. Like I said, if US is down, everything's down for the most part. You can look at the heat map and see that. The 10-year yield, though, dropping to fresh lows is encouraging. Okay, I was just talking to a mortgage banker around here at a 6.5% interest rate, and now we are down. I mean, I'm within about 60 days of closing on a house here, and the market has dropped around 37 basis points. I would hope that's reflected in this interest rate. I'd like to be able to close on a house in the low sixes if possible. You know, I still want to refi, but that refi probably doesn't come until, you know, I'm like probably 1% lower. So, I mean, I'm hopeful. You know, things obviously get worse, then this 10-year continues to drop. And if you've been following these streams at all for 2025, this is exactly what I said. If we're going to see downward push on the US 10-year, it's probably going to come at the pain of the market. Not because of the Fed cutting rates, because that was the exact opposite reaction here. It's pain in the market. Well, we have it. So how much more pain do we have ahead? Well, if we have more pain in the market, you can, I guess, be happy that buying a car or buying a house would get a little bit cheaper as far as interest rates. But to what degree? Possibly an earnings revision that's going to push the market lower, possibly job cuts, possibly a recession. Like, we're so close to that brink. That's the scary part. Now, having said that, at the end of the day, if you're long term, this market's going to be fine. And when I say long term, I'm like, give yourself 3 years, give yourself 5 years, give yourself 10 years. Market's going to be fine. I will say that if we have opportunities that are like, you know, 5-year, 10-year discounts, I'm happy to back up the truck. I'm happy to deploy as much capital as I can and look at the ability to turn, you know, a $3 million portfolio into $5-6 million. It's going to take time and patience and a lot of little bites. But if we have opportunities like we did during COVID, when it's like, look, everything's on sale, I'm just going to deploy some capital, trade, you know, sell some premium. Those are easy profits, but we're not there yet. You know, I wouldn't get really excited about deploying a lot of cash until we're probably down 25 to 30%. That's when I'm more interested in, like, okay, longer term, I think I'm going to be pretty aggressive here. And I still think we could go 50%. If the market's going to get really crappy, we can go 50%. And that'll be, you know, you're talking as bad as a great financial crisis. Awesome. You know, but again, the market's not going to move in a straight line. All I can say is trade good risk. Don't do anything stupid. Don't be a hero. Call on tops and bottoms. Be careful. I'm still going to day trade. I'm still going to swing trade. I'm still going to take my bites when I think it's appropriate. I'm going to trade. And so when the dust settles, I'll figure it out. I'll navigate this crap and I'll be profitable. I'm not worried about that. But it's not going to be easy. Gold. Okay. Gold, pretty volatile on the day. 3166. We're not that far away from 3200. I keep saying this. I put in that 20% extended level over the 200 moving average. One interesting spot to watch for with the dollar index, if you watch DXY in gold, is if we have that giant flush on the dollar and it hits 101 or 100 and the dollar pivots hard to come back and find that pocket. That could be a top in gold. Could be. I don't know if it will be, but it could be. Right? So I'm still not buying gold, although I'm not upset about the profits that I have. I could still run and still run hot, but a pullback is still what I'm looking for and waiting for. Silver, yikes. Not a good look for silver. But I still think silver is incredibly well supported. If I'm going to do more trading on silver, I want to see maybe something in the futures market where if we come back down to a support level or a support level, maybe going out of the way for a 1-1-1 trade that I've done before. So I did that, off of these lows. I did it off of these lows. I did it off of these lows. Like those have been good income trades. Okay. But gold, I think a pullback is needed. I think a pullback is closer lined up now with that dollar index looking as nasty as it is and inefficient, that a pivot on the dollar could also be a pivot in gold, at least to find this, working back to the 200 moving average. Bitcoin, up to 88, down to 81. Not huge destruction on Bitcoin for right now. More volatile MicroStrategy, but also like Bitcoin's hanging in there pretty resiliently. Coinbase, I still got a 155 and watch this one. This is out to April. Let me check this before I go. Coin 155 out to April. This is only out 14 days. Not profit yet because of the swell in volatility, but this is another one that's it's $1,000 of profit as long as we stay above 155. I mean, it may not happen. In 14 days, this might get worse. I might take on some shares. I might have to repair it like I'm doing on Tesla. Speaking of Tesla, for all of its great and glory, I'm still holding up above the 247.50, which will get called away. I did the math on this yesterday. It is a roll from 247.50 to next Friday. If it stays above there, great. There's some income. But I'm not flirting with Tesla too much longer. Hopefully it will stay above that 247.50 level, get it called away for some bucks next week. Should be like $7,000, maybe more now because I did a roll. So, all right. Anyway, that's it. I'll let you go for today. And see you later. All right. Thanks. See you. Bye.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. All month long, you can get the EdgeFinder 40% off, our best discount of the year. Check out the links in the description below to visit the EdgeFinder homepage or speak with a team member directly to get the 40% off discount now. Trade safely and we'll see you tomorrow.